Americans apparently want to go there in the depths of winter now, even because we just can't get enough Europe after the pandemic. I don't know how long this lasts, maybe as long as the dollar is this strong, but I think that's been really shining through in United and helping them close some of the gap. They still have work to do on the loyalty side, and I think the domestic side of their network. And American has kind of been the laggard, and again, I think, you know, their international, especially international into Europe isn't as good, I think, and into Asia is much less than those two carriers. And American just doesn't have the loyalty program as strong, so I think they've been more highly levered than the other two because they've gone through fleet refreshes earlier. So that's sort of why they're the laggard. But again, they all operate in the same marketplace. There are some nuances to their hubs, but it's hard to see any one of them walking away too far from the others. And I think that's why we're seeing this convergence in the full service. We'll see it.
George, we have a little over a minute left, but I didn't want to let you go before we talked about GE and what that read-through in their aerospace division meant for Boeing. Yeah,
so strong. GE's got, you know, the maintenance business really powering cash flow and margins. They guided to next year. They show cash flow and margins, and profit not growing as fast as revenue. Story there is I think you're going to see more deliveries out of Boeing and Airbus. We're calling for that. Those are dilutive deliveries, right? You know, new engines are dilutive to margins. And so that'll take a little bit of the shine off that business, but everybody's flying everything as long as they can because it's hard to get new airplanes because of the supply chain problems, and that's really helping to boost that margin income at GE, which is, you know, well into double digits kind of stuff. It's great stuff.
All right, George Ferguson, thanks so much. We appreciate that. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. Just looking at GE, they've really slid themselves down to those couple of businesses, you know, the aerospace business and being the leader. It's working. The stock has almost doubled in the past 12 months, up 94%. It's hit a 52-week high today, up 7% today, up 21% just year-to-date 2025. So, you know, just something Karen Ubelhart from Bloomberg Intelligence was talking about, I don't know, 5, 6, 7 years ago, that this is what GE needs to do, is focus on their high-growth businesses, and that's it.
Well, also, GE Vernova, they spun off, is up like 225% in the last year, because that's really an energy transition play. All right, coming up, we'll be watching out for President Trump's speech at Davos. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. You can catch us on the radio as well as YouTube. Just go to bloomberg.com YouTube/Bloomberg.com. Look how I did that there. We have quite an hour lined up for you. We will be bringing to you live President Trump's remote address to the World Economic Forum. He will then be followed by questions by the president of WEF and certain chief executives like Blackstone CEO Steve Schwarzman, Bank of America's CEO Brian Moynihan, Total Energy's CEO Patrick Pouyanné, and Banco Santander Chair Ana Botín. It's going to be a fantastic 45 minutes. We are really looking forward to bringing this to you live, where economics sort of meets politics at Davos. We will do that and bring that to you when it begins. In the meantime, let's get you caught up on the markets. Headline level, not doing much. Individually, some stocks are quite interesting. Isabel Lee is joining us, a Bloomberg cross-asset reporter. All right, Isabel, what are you watching?
Electronic Arts shares are plunging 18%. That's the biggest decline since 2008. And that's after the company warned its financial results would be weaker than expected due to really the poor sales of its two titles released over the holidays. So we talked about this. It's sports, which is shocking because sports was able to bring up the earnings on the front of Netflix. So it remains to be seen why the effect was the opposite for Electronic Arts. The company said bookings missed forecasts. It also reduced projected bookings. So that was also lower than its previous guidance. And across Wall Street, they really weren't happy. BMO Capital Markets said that The meaningful miss was disappointing. Raymond James said the shortfall is concerning. Morgan Stanley also said it was disappointing.
Yeah, again, going back to that business, it can be a hit or miss business, and that's the volatility you see in some of these gaming shares over the years. But as we talked about the last hour, they do have some good franchises. So again, when you miss, it kind of
can't win them all, I guess.
Yeah, I guess. Yeah, big surprise stock taking a hit there. What else?
SK Hynix, so it's dragging down semiconductor shares, but just ever so slightly. NVIDIA, AMD, and Broadcom are all edging lower just by shy of 1%, and their rout started after the results of SK Hynix failed to excite AI bulls. It's always the expectation. Even if you didn't deliver high enough, then your stock will plunge. So the caution spilled over in Europe as well. We have ASML also tumbling. So SK Hynix is a South Korean chip maker. They're also the main supplier of high bandwidth memory to NVIDIA. So anything related to NVIDIA, markets will really react to. It reported results Thursday, and it eclipsed the earnings of its rival Samsung for the first time. But again, probably didn't impress high enough or hard enough. And the stock, which rallied 30% before the earnings, slid around 2.7% in Seoul.
It's like you gotta beat, and you gotta beat big. Just your
and when
cue.
does it end? Yeah.
Right, and your cue from Netflix. There. Anything else you're watching?
GE Aerospace, this one is the opposite because at least we have shares climbing after the company reported adjusted EPS that beat estimates. So GE also announced plans to buy back $7 billion of stock, and shares are now up 7%. And if the gains hold, this will be the biggest since April. And the stock surged 64% last year. So it's looking like the optimism is spilling over this year. And it also shows how the company has navigated an industry hounded by supply chain woes. So win for GE, for now at least.
All right, Isabel Lee, thank you so much. We appreciate that. Cross-asset reporter for Bloomberg News. Looking at the feed coming out of Davos, looks like they're getting ready to start. We have the panel situated on the stage of Davos, waiting for President Trump to join via video conferencing. Zoom, I'm guessing. I guess he does the Zoom thing. Let's go to Davos right now and listen to President Donald Trump speaking to the gathering at Davos.
Honor and pleasure to welcome you back to the Davos community. Just 4 days into your new mandate, we highly appreciate your presence with us today. We wish you all the best as you take on your critical work ahead. The global challenges we face today are monumental. The importance of American leadership and your personal leadership in this regard is fundamental and paramount. We are here to hear your vision and policies related to revitalizing the economy and addressing the global challenges. As you might expect, Mr. President, your return to office and your forthcoming policies have been at the focus of our discussions this week. The discussions among 3,000 political and business leaders from over 130 countries who came together here in Davos. We look forward hearing first from you and then to the follow-up discussion with business leaders moderated by my colleague, Børge Brende. Ladies and gentlemen, the President of the United States, Donald J. Trump.
Well, thank you very much, Klaus, and hello to everyone in beautiful Davos. This has been a truly historic week in the United States. 3 days ago, I took the oath of office, and we began the golden age of America. The recent presidential election was won by millions of votes, and all seven, every one of them, all seven swing states. It was a massive mandate from the American people like hasn't been seen in many years, and some of the political pundits, even some of my so-called enemies, said it was the most consequential election victory in 129 years. That's quite nice. What the world has witnessed in the past 72 hours is nothing less than a revolution of common sense. Our country will soon be stronger, wealthier, and more united than ever before, and the entire planet will be more peaceful and prosperous as a result of this incredible momentum and what we're doing and going to do. My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people and to solve every single crisis facing our country. This begins with confronting the economic chaos caused by the failed policies of the last administration. Over the past 4 years, our government racked up $8 trillion in wasteful deficit spending and inflicted nation-wrecking energy restrictions, crippling regulations, and hidden taxes like never before. The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens and even throughout the world. Food prices and the price of almost every other thing known to mankind went through the roof. President Biden totally lost control of what was going on in our country, but in particular with our high inflation economy and at our border. Because of these ruinous policies, total government spending this year is $1.5 trillion higher than was projected to occur when I left office just 4 years ago. Likewise, the cost of servicing the debt is more than 230% higher than was projected in 2020. The inflation rate we are inheriting remains 50% higher than the historic target. It was the highest inflation probably in the history of our country. That's why from the moment I took office, I've taken rapid action to reverse each and every one of these radical left policies that created this calamity, in particular with immigration, crime, and inflation. On day one, I signed an executive order directing every member of my cabinet to marshal all powers at their disposal to defeat inflation and reduce the cost of daily life. I imposed a federal hiring freeze, a federal regulation freeze, a foreign aid freeze, and I created the new Department of Government Efficiency. I terminated the ridiculous and incredibly wasteful Green New Deal. I call it the Green New Scam. Withdrew from the one-sided Paris Climate Accord and ended the insane and costly electric vehicle mandate. We're going to let people buy the car they want to buy. I declared a national energy emergency, and that's so important, national energy emergency to unlock the liquid gold under our feet and pave the way for rapid approvals of new energy infrastructure. The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. My administration has also begun the largest deregulation campaign in history, far exceeding even the record-setting efforts of my last term. In total, the Biden administration imposed $50,000 in additional regulatory costs on the average American household over the last 4 years. I have promised to eliminate 10 old regulations for every new regulation, which will soon put many thousands of dollars back in the pockets of American families. To further unleash our economy, our majorities in the House and Senate, which we also took along with the presidency, are going to pass the largest tax cut in American history, including massive tax cuts for workers and family, and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know, by just reading any paper. My message to every business in the world is very simple. Come make your product in America, and we will give you among the lowest taxes of any nation on earth. We're bringing them down very substantially, even from the original Trump tax cuts. But if you don't make your product in America, which is your prerogative, then very simply you will have to pay a tariff, differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury to strengthen our economy and pay down debt. Under the Trump administration, there will be no better place on earth to create jobs, build factories, or grow a company than right here in the good old USA. Already Americans' economic, you can see this, I think, maybe even in your wonderful, wonderful room that you're all gathered together, so many of my friends, but Americans, the economic confidence is soaring like we haven't seen in many, many decades, maybe not at all. Upon my election, it was just announced that small business optimism skyrocketed by 41 points in a single month. That's the highest ever. There's never been anything like that. SoftBank has announced between a $100 and $200 billion investment in the U.S. economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States. And it's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over, the progress that you're seeing is happening because of our historic victory in a recent presidential election, one that has become quite well known throughout the world. I think a lot of things are happening to a lot of countries. They say that there's light shining all over the world since the election, and even countries that we aren't particularly friendly with are happy because they understand what there is a future and how great the future will be. Under our leadership, America is back and open for business. And this week, I'm also taking swift action to stop the invasion at our southern border. They allowed people to come in at levels that nobody's ever seen before. It was ridiculous. I decided and declared to do, and very, very importantly, a national emergency on our border, immediately halted all entry of illegal border crossers, of which there were many, and began promptly returning the illegal trespassers back to the place from which they came. That action, as you've probably seen, has already started very strongly. I've deployed active duty U.S. military and National Guard troops to the border to assist in repelling the invasion. It was really an invasion. We will not allow our territory to be violated. After 4 long years, the United States is strong and sovereign and a beautiful nation once again. It's a strong, sovereign nation. In addition, I'm pleased to report that America is also a free nation once again. On day one, I signed an executive order to stop all government censorship. No longer will our government label the speech of our own citizens as misinformation or disinformation, which are the favorite words of censors and those who wish to stop the free exchange of ideas and, frankly, progress. We have saved free speech in America, and we've saved it strongly. With another historic executive order this week, I also ended the weaponization of law enforcement against the American people and, frankly, against politicians, and restored the fair, equal, and impartial rule of law. My administration has taken action to abolish all discriminatory diversity, equity, and inclusion nonsense, and these are policies that were absolute nonsense throughout the government and the private sector. With the recent yet somewhat unexpected great Supreme Court decision just made, America will once again become a merit-based country. You have to hear that word, merit-based country. And I've made it official, an official policy of the United States, that there are only 2 genders, male and female. And we will have no men participating in women's sports and transgender operations, which became the rage, will occur very rarely. Finally, as we restore common sense in America, we're moving quickly to bring back strength and peace and stability abroad. I'm also going to ask all NATO nations to increase defense spending to 5% of GDP, which is what it should have been years ago. It was only at 2%, and most nations didn't pay until I came along. I insisted that they pay, and they did, because the United States was really paying the difference at that time, and it was unfair to the United States. But many, many things have been unfair for many years to the United States. Before even taking office, my team negotiated a ceasefire agreement in the Middle East, which wouldn't have happened without us, as I think most of the people in the room know. Earlier this week, the hostages began to return to their families. They are returning, and it's a beautiful sight, and they'll be coming in more and more. They started coming back on Sunday. Our efforts to secure a peace settlement between Russia and Ukraine are now hopefully underway. It's so important to get that done. That is an absolute killing field. Millions of soldiers are being killed. Nobody's seen anything like it since World War II. They're laying dead all over the flat fields. It's a flat field farmland, and there's millions of Russians and millions of Ukrainians. And nobody's seen anything like it since World War II. It's time to end it. And here in America, we have big events coming up. Next year, we have the 250th anniversary of America's founding. I'm so honored to be president during that. That's been a big event. They've been talking about it for 10 years. We also have the World Cup, and I understand Gianni's in the room. Infantino, he was very instrumental in helping us get it. He's there with you someplace, I think, and I want to thank him for that. And then we have the Olympics coming up, which I was instrumental in getting also in my first term. And who would have known that by skipping a term, I would get the Olympics? I was upset. I said, you know, I got the Olympics to come and I won't be president. But it turned out through a stroke of luck, or whatever you might call it, that I'm going to be president during the World Cup and the Olympics and the 250th anniversary. So that's going to be 3 big events. And we've accomplished more in less than 4 days. We have really been working 4 days than other administrations have accomplished in 4 years. And we're just getting started. It's really an amazing thing to see, and the spirit and the light over our country has been incredible. Under the last administration, our nation has suffered greatly, but we're going to bring it back and make it greater, bigger, stronger, better than ever before. I want to thank everybody for being with you. I would have been there myself, except the inauguration was 2 days ago. I thought it might be a little bit quick to make it the first stop, but we'll get there one day. We hope to get there. But I do appreciate, I heard the audience is fantastic, and many of my friends are in the audience, and I will be taking questions now from some very distinguished people. Thank you all very much.
Thank you.
You've been listening to President Donald Trump speaking remotely to the World Economic Forum in Davos. He will now be questioned by the president of the World Economic Forum, along with a handful of CEOs, CEO of Blackstone, Bank of America, Total Energies, and Banco Santander.
To our village next year. We hope to see you.
Thank you very much.
So, we also know, Mr. President, that you open up for interaction here. We have a great panel with some of the most distinguished business people.
Currently questioning Donald Trump remotely at Davos is the president of the World Economic Forum, Jorge Brende.
I think is almost a neighbor of you in in Florida. Mr. Steve Schwartzman, Chairman, CEO, and co-founder of Blackstone Group. So, Steve, floor is yours.
Well, Mr. President, I'm sure the Crown Prince of Saudi Arabia will be really glad you gave this speech today. You've had the busiest 4 days that anybody can imagine, and congratulations for that. My question is about some of the things I've observed here at Davos. It's a terrific forum. I've met lots of people, as usual. I think I've been here 30 years. And a lot of the European business people have expressed enormous frustration with the regulatory regime in the EU, and they attribute slower growth rates here because of the numerous factors, but especially because of regulations. And you've taken a completely different approach in this area. And if you could explain the theory of what you're doing, how you're going to do it, and what you expect the outcome to be, I'd appreciate it.
Well, thank you very much, and congratulations, Steve. You're a friend of mine, but on a great career. You have had an amazing career, and it continues. I just want to congratulate you. Very inspirational to a lot of people. I want to talk about the EU, because you mentioned specifically that I've also had a lot of friends and leaders of countries. I've gotten to know them all my first term and a little bit during this period of 4 years, and know them well, like them a lot, but they're very frustrated because of the time everything seems to take to get approved, environmental impact statements for things that you shouldn't even have to do that, and many, many other ways that it takes. And I'm going to give you a quick little example. In the private life, my beautiful private life, before I had all these things happening, the world is a little different. I had a nice, simple life. You knew that. But when I had that simple life, I did projects. And I had a big project in Ireland. And it had to get approval on something that would have made it even better. And I got the approval from Ireland in a period of a week. And it was a very, very efficient, good approval. And they informed me, though, the problem is you're going to have to get it from the EU, and we think that'll take 5 to 6 years. And I said, you have to be kidding. And this was before politics. And I said, wait a minute, it's not that important. I don't want to go 5 or 6 years, but it would have been a big investment. It would have been nice, and it would have been good for the project. And I sent the people to the EU to see if they could speed it up, and basically it was a 5 or 6 year wait just to get a simple approval that Ireland gave me in a period of literally not much more than a week. And I realized right then, that was the first time I really was involved with the EU, but I realized right then that's a problem, and I didn't even bother applying to do it. Or if I did, I pulled it very quickly. I have to be very accurate because I don't want to be criticized. He did apply, actually. No, I want to be very accurate. So I don't think I did, but if I did, I pulled it very quickly. It was just something you couldn't wait 5 years or 6 years to get an approval. So a lot of, in a very big business sense, a lot of people are claiming that's the problem. From the standpoint of America, the EU treats us very, very unfairly, very badly. They have a large tax that we know about, and a VAT tax, and it's a very substantial one. They don't take essentially don't take our farm products, and they don't take our cars, yet they send cars to us by the millions. They put tariffs on things that we want to do, like, for instance, I think they actually, in terms of, these are non-economic or non-monetary tariffs, and those are very bad. And they make it very difficult to bring products into Europe, and yet they expect to be selling, and they do sell their products in the United States. So we have, hundreds of billions of dollars of deficits with the EU, and nobody's happy with it, and we're going to do something about it, but nobody's happy with it. So I think the EU has to speed up their process. Friends of mine that are in some of the nations within the EU, great people, they want to be able to compete better, and you can't compete when you can't go through the approval process fast. There's no reason why it can't go faster. So, I'm trying to be constructive because I love Europe. I love the countries of Europe, but the process is a very cumbersome one, and they do treat the United States of America very, very unfairly with the VAT taxes and all of the other taxes they impose. One other, just to finish up, I got a call from the head of a major airline, one of the biggest airlines in the world, and He said, "Sir, could you help us? What? Landing in Europe is brutal. They charge us fees for everything, and it's so unfair." I said, "How does it compare to China?" He said, it's much worse. And the other thing, as you know, they took court cases with Apple, and they supposedly won a case that most people didn't think was much of a case. They won 15 or 16 billion from Apple. They won billions from Google. I think they're after Facebook for billions and billions. These are American companies, whether you like them or not. They're American companies, and they shouldn't be doing that. And that's, as far as I'm concerned, it's a form of taxation. So we have some very big complaints with the EU. Thank you.
Thank you very much, Mr. President. We'll now go to one of your friends in the EU, Patrick Pouyanné. He's the chairman CEO of Total Energies. I guess you have a question ready, Patrick, for the president.
Mr. President, as we understand, energy is at the top of your agenda, and it's an honor for me to represent the energy industry tonight. In this panel, Total Energies is indeed the fourth largest oil and gas and electricity company in the world. I will not ask you a question about the oil price. It's quite clear what you expect from us. I will more go to gas more. And our company is the largest #1 exporter LNG from the US company. We are a strong contributor to, and we invest in a mammoth LNG projects in Texas, $20 billion. It's far from 200, but it's $20 billion. And we contribute with that to security of supply to Europe as we export this LNG to Europe. Some experts fear that if there are too many projects developed in the US on LNG, this could have an inflationary impact on the US domestic gas price. And they recommend a pause on these projects. I would ask you the following question: what are your views about such a pause on investments on LNG in the US? What would happen if you would observe an increased domestic gas price because of these exports? And final question, which is important for Europe: would you agree to guarantee security of supplies of US LNG to Europe?
Well, on the last part of your question, yes, I would. I would make sure that you get it. If we make a deal, we make a deal, you'll get it. Because a lot of people do have that problem. They make a deal and then it can't get supplied because of war-type problems and other problems. So we would absolutely do that. LNG is very interesting because when I took office for the first term, one of the first things I looked at was there were two very massive plants in Louisiana, a state that has been very good to me, won it by many, many points. And I felt strongly indebted to it, actually. And they said there are two plants that have been under environmental consideration for more than 10 years. And they were costing, as you say, you know how expensive those plants are, but they were costing like 12 billion and I think 14 or 15 billion, but they couldn't get their permits. They were in review for years, many, many years, like a decade or more. And I said, it's so ridiculous. I know so much about that because in the construction industry, I had to go through it too, but I got good at it after a while. But I saw the projects, and you're talking about a total investment of 25 to $30 billion, and it looked like it was going to end. They couldn't get their permits, and I got them done in less than a week. It was done, completed. In fact, when they called them to announce that it was done, the countries, largely countries, Japan was involved and another country and some very big investors, they couldn't believe it. They actually couldn't believe it. And I said, just do yourself one favor. Don't pay any consultants, because the only one that got it done was me. I got it done because it was the right thing to do for the U.S. and for the world, but the consultants had nothing to do with it. You know, the consultants go in and they say, give us millions of dollars because Trump did it. Nobody called me about it. I just heard it was a problem for years. And I got it done because it was the right thing to do for the U.S. and the right thing to do for beyond. It had to do with energy, very important. So I think it's very important. I think I disagree with one. I think the more that you do, the lower the price is going to go. And what I'd like to see is rapid approvals. We're going to give very rapid approvals in the United States, like with the AI plants, talking to many people want to build them. That's going to be a very big thing. We're going to build electric generating facilities. They are going to build. I'm going to get them the approval. Under emergency declaration, I can get the approvals done myself without having to go through years of waiting. And the big problem is we need double the energy we currently have in the United States. Can you imagine? For AI to really be as big as we want to have it, because it's a very competitive, it'll be very competitive with China and others. So I'm going to give emergency declarations so that they can start building them almost immediately. And I think it was largely my idea because nobody thought this was possible. It wasn't that they were not smart, because they're the smartest. But I told them that what I want you to do is build your electric generating plant right next to your plant as a separate building connected. And they said, wow, you're kidding. And I said, no, I'm not kidding. You don't have to hook into the grid, which is old and, you know, could be taken out. If it's taken out, they wouldn't have any way to get any electricity. So we are going to allow them to go on a very rapid basis to build their plant, build the electric generating plant. They can fuel it with anything they want, and they may have coal as a backup, good, clean coal, you know. If there were a problem with a pipe coming in, as an example, you're going with gas, oil or gas, and a pipe gets blown up or for some reason doesn't work, there are some companies in the U.S. that have coal sitting right by the plant so that if there's an emergency, they can go to that short-term basis and use our very clean coal. So that's something else that a lot of people didn't even know about, but nothing can destroy coal, not the weather, not a bomb, nothing. It might make it a little smaller, might make it a little different shape, but coal is very strong as a backup. It's a great backup to have that facility, and it wouldn't cost much more money. And we have more coal than anybody. We also have more oil and gas than anybody. So we're going to make it so that the plants will have their own electric generating facilities attached right to their plant. They don't have to worry about a utility. They don't have to worry about anything. And we're going to get very rapid approvals.
Thank you. Thank you so much, Mr. President. We'll now go to another CEO that you know very well, Brian Moynihan, the CEO and Chair of Bank of America.
Good afternoon, Mr. President, and congratulations, and obviously an eventful week for you and your family. If you remember 5 years ago, you came here and we walked among 150 CEOs from all over the world, and you engaged with them about your policies and your procedures. This year, you're not here, and yet this week was eventful from the orders that you mentioned earlier, literally a wave of orders coming out on immigration, on trade, and many other matters. And so, as a representative of the United States here, we got a lot of questions about what does all this mean and how would the president square this with his clear focus on growth, prosperity, market growth, stock market growth, a good bond market, and bringing down prices. So how do you think about the impact of all these orders and how fast they come out, and how you're going to balance them with that scorecard of being successful in both continuing GDP growth, bringing down inflation, and also having a good stock price appreciation for the American citizen?
Well, I think it's going to actually bring down inflation. It's going to bring up jobs. We're going to have a lot of jobs. We're going to have a lot of companies moving in. You know, Brian, we're at 21%. It was at 40%, and I got it down to 21%, the corporate tax. And it was actually, if you look at state and city, it was in many cases much higher than 40%. I got it down to 21%. And now we're going to bring it down from 21 to 15% if, there's a big if you make your product in the U.S. So we're going to have the lowest, just about the lowest rate. It'll be, the 21 is on the low side worldwide. The 15 is about as low as it gets. And by far the lowest of a large country, a large, you know, rich, powerful country by far, not even a contest. So we're going to bring it down to 15% if you make your product in the USA. So that's going to create a tremendous buzz. We're also probably going back to the one-year deduction where we deduct, you know, we did that originally, and that was amazing what the impact that had, the one-year deduction, which built up over a period of time, and then it expires But we're going to go back to that when we do the renewal of the Trump tax plan. We have to get Democrats to approve it. But, you know, if the Democrats didn't approve it, I don't know how they can survive with about a 45% tax increase, because that's what it would be. And so I think they're going to do. We've been working along with them pretty well. I think it's very hard for a political group to say, let's charge people 45% more. So I think we're in good shape, but we're actually doing a reduction for business and small businesses where you're going to bring it down to 15%, which is really something. And by the way, speaking of you, and you've done a fantastic job, but I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Mr. President, I'll say that your friend Gianni said hello, told me to tell you hello, and we look forward to sponsoring the World Cup when it comes, both this summer for the club and next year. So thank you for getting that for the United States.
Thank you very much, Brian.
Thank you, Mr. President. We'll now go to Ana Butin. She's the executive chairman of Banco Santander, one of the big European banks, and also in the U.S. So, Ana.
Mr. President, congratulations on a historic victory. I believe you don't know me as well as my fellow panelists, so a few words. Santander is one of the largest banks in the world by number of customers, 170 million. That's more than my friend Brian or my friend Jamie have. And those...
They fixed the regulation.
That's coming, that's coming.
That was cheeky.
We're a big investor in the United States. We have many million customers, 12,000 employees. We're one of the largest auto lenders. And we recently launched a fully digital bank called Open Bank. We strongly believe banks have a pivotal role in the economy, and we can accelerate growth and help many more customers. That's what we're doing in the United States. So, as Brian pointed out, we very much welcome your focus on deregulation and reducing bureaucracy. So my question is, what are your priorities in this regard, and how fast is this going to happen? Thank you very much.
I think it's going to, thank you and congratulations. I know very much about your bank, and you've done a fantastic job. Congratulations. We are going to move very quickly. We've moved very quickly. We've done things in the last 3 days that nobody thought were possible to do in years. And it's all taking effect. It's going to have a huge impact on the economy, a huge positive impact. Money was being wasted on crazy things. I mean, the Green New Deal was such a total disgrace, how that was perpetrated. And it was conceived of by people that were average students, less than average students, I might add, and never even took a course in energy or the environment. It was just a game. Remember, the world was going to end in 12 years? Remember that? Well, the 12 years has come and gone. It was going to end. It was going to all foam into earth. But, you know, the time has come. These people, and they really scared the Democrats large. I can't say the Republicans. The Republicans maybe could have fought harder to stop it, but it's been a tremendous waste of money. You know, during my 4 years, we had the cleanest air, we had the cleanest water, and yet we had the most productive economy in the history of our country. We had the most productive economy. Until COVID came, we had the most productive in the history of our country by far. And actually, you could look worldwide. We were beating everybody from China to everybody else. So, and we think we really now, with what we have learned and all of the other things that have taken place, we think we can even far surpass that, actually far, far surpass it. But we do, one thing we're going to be demanding is we're going to be demanding respect from other nations. Canada, we have a tremendous deficit with Canada. We're not going to have that anymore. We can't do it. I don't know if it's good for them. As you probably know, I say you can always become a state And if you're a state, we won't have a deficit, we won't have to tariff you, et cetera, et cetera. But Canada has been very tough to deal with over the years, and it's not fair that we should have a $200 billion or $250 billion deficit. We don't need them to make our cars, and they make a lot of them. We don't need their lumber because we have our own forests, et cetera, et cetera. We don't need their oil and gas. We have more than anybody. So, you know, just as an example, with Mexico, we're dealing with Mexico, I think, very well. And we're just, you know, we just want to be treated fairly with other nations because there's hardly a nation in the world, and I blame this on us, and I blame it on politicians that, for some reason, mostly it's stupidity, but you could also say other reasons, but mostly stupidity. They've allowed other nations to take advantage of the U.S., and we can't allow that to happen anymore. You know, we have debt. It's a very small debt when you compare it to value, the value of the assets that we have, but we don't want to do that. We want to just have debt be obliterated, and we'll be able to do that fairly rapidly. And a lot of good things are going to happen. And honestly, good things are going to happen for the world, and good things are going to happen for the people that are dealing with us, allies and beyond allies. One thing very important, I really would like to be able to meet with President Putin soon and get that war ended. And that's not from the standpoint of economy or anything else. It's from the standpoint of millions of lives are being wasted. Beautiful young people are being shot in the battlefield. You know, the bullet, very flat land, as I said, and the bullet goes, there's no hiding, and a bullet, the only thing going to stop the bullet is a human body. And you have to see, I've seen pictures of what's taken place. It's a carnage, and we really have to stop that war. That war is horrible. And I'm not talking economy, I'm not talking economics, I'm not talking about natural resource. I'm just talking about there's so many young people being killed in this war, and that's not including the people that have been killed as the cities are being, you know, knocked down building by building. So we really should get that stopped. Likewise, in the Middle East, I think we've made a lot of progress in the Middle East, and I think that's gonna come along pretty well. Thank you.
Thank you, Mr. President. We know that the most consequential relationship in the world is between the U.S. and China. U.S. 28% of the global economy, China close to 20%. That's almost half of the global GDP. And we know that you called President Xi Jinping last Friday. We heard that you had a good discussion. How do you see the relationship between the U.S. and China in the next 4 years under your leadership?
He called me, but I see it very good. I think that we're going to have a very good relationship. All we want is fairness. We just want a level playing field. We don't want to take advantage. We've been having massive deficits with China. Biden allowed it to get out of hand. He's $1.1 trillion deficit. It's ridiculous. And it's just an unfair relationship. And we have to make it just fair. We don't have to make it phenomenal. We have to make it a fair relationship. Right now, it's not a fair relationship. The deficit is massive, as it is with other countries, a lot of Asian countries, actually. But we have deficits that are very big, and we can't keep doing that. So we're not going to keep doing that. But I like President Xi very much. I've always liked him. We always had a very good relationship. It was very strained with COVID coming out of Wuhan. Obviously, that strained it. I'm sure it strained it with a lot of people, but that strained our relationship. But we always had a great relationship, I would say, and we look forward to doing very well with China and getting along with China. Hopefully, China can help us stop the war with, in particular, Russia, Ukraine. They have a great deal of power over that situation, and we'll work with them. And I mentioned that during our phone conversation with President Xi. And hopefully we could work together and get that stopped. We'd like to see denuclearization. In fact, with President Putin, prior to an election result, which was frankly ridiculous, we were talking about denuclearization of our two countries, and China would have come along. China has a much smaller, right now, nuclear armament than us, or field than us, but they're going to be catching it at some point over the next 4 or 5 years. And I will tell you that President Putin really liked the idea of cutting way back on nuclear. And I think the rest of the world, we would have gotten them to follow. And China would have come along too. China also liked it. Tremendous amounts of money are being spent on nuclear. And the destructive capability is something that we don't even want to talk about today because you don't want to hear it. It's too depressing. So we want to see if we can denuclearize, and I think that's very possible. And I can tell you that President Putin wanted to do it. He and I wanted to do it. We had a good conversation with China. They would have been involved, and that would have been an unbelievable thing for the planet.
Mr. President, when you're back here in Davos next year, will there be then a peace agreement with Ukraine and Russia by then?
Well, you're going to have to ask Russia. Ukraine is ready to make a deal. Just so you understand, this is a war that should have never started. If I were president, it would never have started. This is a war that should have never, ever been started. And it wasn't started during there was never even talk about it. I knew that it was the apple of President Putin's eye, but I also knew that there was no way he was going in, and he wasn't going to go in. And then when I was out, bad things happened, bad things were said, a lot of stupidity all around, and you end up with what you have. Now you have all these bombed out cities. They look like demolition sites with many people killed. I think the thing that you'll see about Ukraine is that far more people have died than is being reported. And I've seen that. But far, far more people have died. When you look at a city that's become a demolition site where big buildings have been collapsed by missiles hitting them and everything else, and they say one person was slightly injured. No, many people were killed. Those are big buildings. I was surprised at how that was my business. These are buildings that go 2 and 3 blocks long. They're 20 stories high. They're big, powerful buildings, and they were knocked down, and there were a lot of people in those buildings. That announced that 2 people were injured. That's not true. So I think you're going to find that there were many more people killed in Ukraine in the Ukraine war than anybody has any idea. But if you look now, so many of the people being killed are soldiers just facing each other with guns, rifles, and drones, the new form of warfare, drones. And it's a very sad thing to see. And when you see pictures of the fields that I see, nobody wants to see it. You'll never be the same.
Thank you very much, Mr. President, on behalf of all the 3,000 participants here in Davos. We really underline that joining us the 3rd day in your presidency, live taking questions here is so appreciated, and we are already ready for receiving you next year in person. So thank you very much, and all the best from Davos.
Thank you. Thank you very much.
All right, that was President Trump speaking virtually to the crowd at Davos in the World Economic Forum. Borja Brende, he's the president of the World Economic Forum, kind of moderating that. Brian Moynihan, Bank of America, Blackstone, Steven Schwartzman, Banco Santander's Anna Botín, and Total Energy's Patrick Pouyanné. Thank you very much. Asking questions. So we kind of spirited back and forth there. Let's get a little bit of a breakdown of kind of what we just heard over the last 45, 50 minutes. We can do that with Nick Wadhams. He is a U.S. national security reporter for Bloomberg News. He is based down in Washington, D.C. Nick, anything new for you in President Trump's remarks?
Well, to me, what you just saw there was a president who was in almost complete control. I mean, it's just an extraordinary moment, the amount of deference from these titans of industry from around the globe, essentially giving the president everything he wants. I mean, Brian Moynihan there dodging. The president criticizes Bank of America for allegedly not banking conservatives, and Brian Moynihan just kind of takes it and says thank you, and hey, we're getting ready to sponsor the Olympics. Trump demands OPEC lower prices, increase output. He tells everybody, listen, if you want to build in the U.S., that's great. Otherwise, we're going to tariff you. And the response is essentially applause. So an extraordinary dynamic where you just sort of see the degree to which global, the real power players who are all collected in Davos there are giving him an extraordinary amount of deference.
We were talking to Nathan Dean of Bloomberg Intelligence before, about last 2 hours, and said that he was looking for the confrontational or negotiator President Trump. If we parse him in those ways, which Trump did you just see?
I mean, sounded pretty confrontational to me, essentially saying, listen, if you don't build here, we're going to jack tariffs up on all of you. He criticized the EU. He takes a quick shot at Bank of America. He goes after OPEC. He also tells a story which is not 100% true on the issue of denuclearization. That part at the end, talks with Russia and especially China were essentially at a standstill at the end of his first administration on the idea of denuclearization. So very much in keeping with the president, where he is obviously in his milieu, feels very comfortable, but has no qualms about being extremely confrontational, presumably in part because he knows the response he's going to get, which is essentially applause and in some cases a little bit of awkward laughter, but there at the end, a hope that he'll come in person next year.
Nick, a lot of questions on Ukraine and the ability of the U.S. to play a role in ending that conflict here. What's the feeling within your realm, national security, about the role the U.S. can play and maybe the timing associated with it?
Well, the timing is obviously quite unclear. The president had said before he came into office that this was something he was going to be able to do to solve before Inauguration Day or within 24 hours. That obviously hasn't happened. What we've understood is that officials within the administration are recognizing the enormity of the task and that it may take some time. And that was one element I thought was quite interesting from President Trump, where he essentially said there, listen, this is something that is the ball is in President Putin's court. You know, he's saying Ukraine is ready to come to the table. So he can act very much as a point of leverage and a pressure point. But whereas before the inauguration, there was a lot of focus on Ukraine and his transition team saying really that Ukraine needed to come to the table, they're now really trying to put the pressure on Vladimir Putin. So though he's essentially saying he wants to talk to Putin, he respects him, I did see some more pressure there that this is really in Russia's court to kickstart the negotiations. But in terms of timing, they're really not willing to say at this point.
I was really struck by how much energy took center stage. I mean, clearly Total's CEO is there, so that was definitely part of it. But there were some clear statements made, like he will make sure that Europe gets U.S. LNG. He talked about coal. He did say clean coal, but that was going to be a backup for generation. Peabody Energy, which is a coal producer, spiking on that news. Europeans hate coal. So that was like something that was a pretty interesting moment. In your world, Nick, how much of an energy analyst do you have to become if you're national security and now you have President Trump in office?
I would say that's going to be a huge priority for all of us going forward. I mean, you know, in some ways, it's really no surprise. The president is essentially repeating elements, sometimes word for word, of his campaign speech. I don't think he mentioned his dislike for windmills there, but he has taken a bunch of actions already to essentially try to steer U.S. energy production away from renewables. You know, this really is at the center of his campaign and his ethos, that he believes the U.S. needs to increase energy production, and it really speaks to his sense of what the U.S. role is in the world as a provider of energy to other countries. He really sees it as a point of leverage for the United States, and that's something he's going to double down on, you can be certain, in the years to come.
And Nick, not surprisingly, President Trump also brought up the issue of immigration, illegal immigration in the United States, and perhaps deportations. What do we know at this early stage about the plans of this administration to implement maybe some deportation measures? To what extent will, I don't know, National Guard or even active duty troops be involved, if at all?
Well, the U.S. is in the process of deploying about 1,500 troops to the border, though it's unclear what exactly their role will be. The president has also sought to give more authority to various government agents around the country, and we do have reports coming in that some of those arrests have basically already started. So, I mean, he is absolutely determined to do this. We've heard today that Secretary of State Marco Rubio is in fact going to be going to several Central American countries in his first trip. And the point there really is to have conversations and say, listen, okay, we want to kick these people out. They have to go someplace. They have to have a place to go. The planes need to fly somewhere. So where is that going to be? A lot of focus right now on El Salvador, Guatemala, obviously, but this is one of the top 2 or 3 priorities for this administration. Proceeding with those deportations and finding places that will receive those people. So negotiations are fully underway on that score.
All right, Nick, thank you so much. We appreciate that. Nick Wadhams, U.S. National Security Team Leader for Bloomberg News. Just give us a little recap of the comments we heard from President Trump, who spoke virtually to the audience at the World Economic Forum in Davos. And again, as you mentioned, Alex, a big focus on energy, and President Trump calling out OPEC. So my question to you as an energy expert is, with the U.S. now as a net producer, how much does OPEC really impact prices? As much as it was 20 years ago?
Well, interestingly enough, I mean, if he called Saudi Arabia and said, look, guys, you got to put your spare capacity back up online, and if they did that, it would very much influence the oil price overall. Because the point is the Saudi cuts, well, OPEC plus cuts, which really amount to Saudi cuts, have been in place for quite a long time, and getting that back into the market has proved difficult. They've had to push it back month after month after month because there just isn't the demand there to support that supply coming back online. So there is a very strong lever to pull. However, if you look at the Dallas Fed survey, on average, you're looking at $68 a barrel for oil producers in the U.S. It can vary by basin or by producer. So there's only so much that an oil producer would be willing to take on that point. Also, remember, if they're going to make investments, say, in the Gulf of Mexico, you're going to want a higher price to do that because it can get quite expensive, and these are longer-term projects. It's not a short-cycle shale situation. They're longer-term projects, and you're going to want better visibility than just oil dumping that happens.
Because you could argue the average energy producer that you know down in Texas, Louisiana, and wherever, they're pretty happy with where oil is, generally, aren't they?
Yeah, I don't think that's a problem. I think it's just if you ask them, you're like, hey, what are you complaining about under President Biden? They just don't want to be made the enemy. They just don't want more rules, more regulation. They want more clarity and more runway. Because I always make the argument, I'm like, you guys can produce as much as you want. Like, it's nothing to do with the government. I just think they want like the less hostile environment at the end of the day.
Yeah, and the question is, you know, again, as being a net exporter now for the first time, and really in the history of the U.S. several years ago, and then the LNG is a big issue, and we saw that with the Russian invasion of Ukraine and how important LNG is for Europe.
And speaking of, tomorrow, Venture Global should be IPOing. It will be the biggest LNG exporter in the United States to IPO.
Very well, be on top of that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121 across the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121, presented by Oracle. This is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump tells the World Economic Forum his administration has done more in 4 days than others have done in 4 years. The wheels are already in motion to get more troops to the southern border and deter asylum seekers. CBS's Nancy Cordes has more on the impact of the migrant crackdown in one city.
Pastor Emma Lozano runs a Methodist church in Chicago that used to provide sanctuary for migrants facing deportation. But now she's worried that it could make her church a target for ICE.
We're telling our families from my church and that if you are deported, you should already have paperwork set so we know where your children need to go.
In Washington, Texas Republican Congressman Brian Babin has introduced a bill to block birthright citizenship.
President Trump has made it clear that restoring fairness to our immigration system and defending the true intent of the 14th Amendment are central to his vision of making America great again.
And today, a federal court hears arguments from states challenging the Trump order on birthright citizenship. Legal analyst Thane Rosenbaum.
Everyone realized that President Trump's executive order would be challenged. 22 state attorneys general are asking a federal judge to issue a temporary restraining order arguing that the 14th Amendment ensures birthright citizenship regardless of the immigration status of their parents.
Firefighters in Southern California working on a fast-moving blaze north of Los Angeles that's forced thousands out of their homes. Sheila Kelleher is with the L.A. County Fire Department.
Wind-driven fire, it moved very quickly, but we made an aggressive air attack with a robust air fleet, and they did an incredible job overnight, really protecting those homes in Passaic where we didn't lose a structure.
A teenager who stabbed 3 young girls to death at a Taylor Swift-themed dance class in Britain has been sentenced to more than 50 years in prison. CBS's Cammie McCormick has more on Moscow's pushback to the Trump call for the end of the war in Ukraine.
A Kremlin spokesman says Trump is fond of sanctions, especially during his first term, and the threat is nothing new. But Russia is ready for mutually respectful dialogue with Trump. It's expected he and Vladimir Putin will talk on the phone, but Moscow says it is waiting for signals which have not yet come.
President Trump indicated today he'll demand interest rates drop immediately. In Hollywood, the film Emilia Perez leads the field with 13 Oscar nominations. Wicked and The Brutalist have 10 each. Wall Street, the Dow is up 247 points. The S&P is higher, and the NASDAQ is down 54. This is CBS News.
Love.
Fans have not forgotten a legendary guitarist. A London auction is proof.
Many of his peers consider Jeff Beck the greatest guitarist of all time. 2 years after his death, his collection of guitars, amps, pedals, and personal artwork has raised $11 million, more than 8 times the pre-sale estimate, with bids from 40 countries. The 1954 Gibson Les Paul guitar, which featured on the cover of Beck's 1975 album Blow by Blow, fetched $1.3 million. Some of the proceeds are going to a local wildlife shelter supported by Beck, his wife, and his close friend Johnny Depp. Vicki Barker, CBS News.
A 200-year-old bottle was uncovered at a British building site. Inside was what looked like rum, and those at the job site wanted to drink it. But instead, they had it analyzed, and it was found to be urine, perhaps saved in the 1700s to ward off witches. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump demands lower oil prices and interest rates. Why not? Welcome to the fastest show in politics as the president speaks to the elite at Davos. You heard and saw him live here on Bloomberg, calling on Saudi Arabia to pump more, and I guess the Fed, demanding the Fed lower rates. We're going to get into all of this. Talk about what we learned in the Q&A with Bloomberg's Michael McKee. He'll join us live from New York. We'll update negotiations on the Hill when it comes to budget, tax cuts, and the border with Bloomberg's Mike Dorning. And we'll walk through Donald Trump's first Oval Office interview with our political panel today. Republican strategist Rick Davis is with us, Bloomberg Politics contributor, alongside Democratic strategist Brad Howard from Corcoran Street Group. So let's get to it. It all follows, of course, a look at Wall Street. For that, we turn to our friend Charlie Pellet at World Headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. We have got the Dow, the S&P higher, NASDAQ moving lower. In fact, stocks very close to session highs. Oil sank after President Trump urged OPEC to lower crude prices. also saying he will push for interest rate cuts. West Texas Intermediate crude trading lower, down now by 0.9%. The S&P up 0.6, up 0.1%. The Dow up 258, up 0.6%. NASDAQ now lower by 60, a decline there of 0.3%. The Russell 2000 index up now by 0.2%, with the 10-year currently yielding 4.64%, the 2-year 4.28%. Gold down $2 the ounce, little change, down under 0.1%, 27.54 right now on the precious metal. West Texas Intermediate crude, as I mentioned, down 1% now, 74.70 a barrel, and Bitcoin up by 0.7% at $104,800 on Bitcoin. Morgan Stanley CEO Ted Pick says pent-up demand for mergers and acquisitions, particularly among private equity firms, is poised to spur a surge in deal activity. He spoke with Bloomberg this morning at the World Economic Forum in Davos. He also talked about the Trump administration.
I am positive because it is definitely a change in tone. It just feels like the overall framework is one where there's going to be more interaction between the public and the private sectors. It can't be state actors alone, and it can't be private companies alone. So the fact that there's real dialogue building, I think that's a huge plus.
Morgan Stanley CEO Ted Pick speaking with Bloomberg at the World Economic Forum in Davos. Again, stocks are trading little changed on the S&P right now, up by about 0.1%. The Dow is higher by 0.6. NASDAQ lower by 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, sir. Always great to see you, Charlie, and welcome to the Thursday edition of Balance of Power. You made it to Little Friday, and we do have news. Just breaking, it's going to be quite a ride for Tulsi Gabbard next Thursday. You can circle that one on the calendar here. Gabbard's confirmation hearing in the U.S. Senate. This is, of course, for a very important job here as Director of National Intelligence, and a lot of concerns about her position on any number of issues, including her relationship with Bashar al-Assad. Yes, Sisi, it's going to be appointment viewing. We have more where that came from. John Ratcliffe, by the way, looks like he'll be sworn in today. Then we move on to Kristi Noem's. This is, of course, Department of Homeland Security confirmation likely this coming weekend or Monday. Scott Bessent would shortly follow. And we're still trying to find out what happens with Pete Hegseth here. We still have some pretty important no's. Mitch McConnell, Susan Collins, Lisa Murkowski, potential no's that make it kind of hard to do the math. Though everyone keeps telling us he's going to pass with flying colors here. We'll keep tabs on confirmations. We'll talk about that a little bit more coming up here. Kash Patel also going to be next week. This could be a ripper. We'll, of course, walk through them together here. Important morning, or I guess evening, local time at Davos. Did you hear Donald Trump? Quite a conversation there, the Q&A with some familiar names if you listen to Bloomberg, of course, as you just heard Steve Schwartzman, Brian Moynihan, and others asking Donald Trump about his ideas when it comes to everything from economic policy, energy, national security, and so forth. Here's Donald Trump speaking virtually, by the way. He was behind a podium with a presidential seal. Give you a sense of what it sounded like.
My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people and to solve every single crisis facing our country. This begins with confronting the economic chaos caused by the failed policies of the last administration.
Hasn't, I think, stood at a podium yet without trashing the last guy. And it generates the headline on the terminal. Trump urges lower oil prices, interest rate cuts at Davos. And so we thought we got to talk to Professor McKee about this and see if there was actually any news there. Michael McKee, of course, Bloomberg economics editor with us from New York. It's great to see you, Michael. Is Jay Powell on the other end of the line here? Does he care what Donald Trump says?
I don't think he cares what Donald Trump says, except to the extent it makes his job a bit more difficult. Obviously, what you just heard in the clip that you played, none of that was true. There is no economic disaster here, and there's no chaos. The U.S. economy is the strongest in the world. But, and most of the speech made no sense, but he did make a couple of bits of news, one of which was saying he would demand that interest rates go down immediately. That's not going to happen. We have a Fed meeting next week. They're not going to cut interest rates. Whether they cut interest rates at the next meeting in March is going to depend on how the economy develops, which is going to depend on how Donald Trump's policies develop. So it is possible we see more conflict between them. And the other little bit of news he made is that he would ask OPEC to pump more oil, which they're very likely not going to do because they like the price where it is. And for the Saudis in particular, who have the excess capacity, they want the price there because it helps fund their government. So other than those two things, there wasn't much that we didn't hear from the campaign.
Right, exactly. So I don't want to put you in a weird position here, Mike McKee, but Brian Moynihan knows all of that, surely. He knows exactly what you just said, but there was a little bit of dear leader going on there, right? I mean, everybody had to say something really nice about Donald Trump and a friend, and congratulations, what a week you've had in your family. Was this a strange moment at Davos or just par for the course?
Well, it was a strange moment at Davos, but it's sort of par for the course the last couple of weeks. Nick Wadhams, our national security correspondent, was just on Bloomberg Intelligence Radio a short time ago, and I think he put it well. He said it showed Donald Trump, at least for now, is totally in command of the CEOs who are out there. It was very striking to hear the CEOs be very obsequious towards him. And you know, Steve Schwartzman asked him, how are you going to proceed with deregulation? And he went on to talk about how terrible EU regulation is, didn't answer that question. And then, of course, the amazing thing was when he criticized Brian Moynihan and Bank of America for not opening the bank to conservatives, and that he and Jamie, referring to Jamie Dimon, one assumes, at J.P. Morgan, need to do more to open banking to conservatives. And Brian Moynihan didn't respond. All he said was, well, thank you, Mr. President, for bringing the World Cup to the United States. It was a kind of surreal moment. So it does show that he does have some sort of grip over people at this point. Right. The real question is if that continues, if he gets any of the things done that he promised to do today.
Well, that's absolutely right. And when we get back to the idea of interest rate cuts, what is the reality that our viewers and listeners should know about here? Because your point is inheriting a pretty strong economy, and it's not one that will likely support interest rate cuts in the near term, right?
Yeah, well, it would support interest rate cuts, but the Fed is concerned about inflation. Obviously, we've seen the latest inflation reports come in. Both CPI and PCE have sort of stalled out. They're not at the 2% target yet. And so the Fed wants to wait and see what happens. We got a jobs report this month that suggests we're not going to fall into recession soon. So they don't need to cut rates for that reason. So the Fed is basically on hold until they see a reason to move one way or another. There was some concern after the last CPI report that maybe they would start thinking of raising rates, but I don't think that's on the table yet. I think basically they're just looking at the current rate for longer.
Well, I mean, you look at the bond market here, the 10 years actually up a couple of ticks, 465. The market doesn't believe what Donald Trump said, right?
Well, the market is basically pricing in the idea that we will get some inflation from the next few years, in part because the economy is strong and in part because Donald Trump is talking about stimulating the economy more. The market doesn't think at this point that it's going to run away. It's not going to be the kind of inflation we had coming out of the pandemic, but they're basically pricing in an inflation premium and certainly an uncertainty premium at this point. And we're all kind of trying to figure out what would be a normal interest rate. From the Fed trying to figure out what's the neutral rate that would neither stimulate or hold back the economy, to market people who are trying to figure out what do you charge people to take out loans in this kind of economy. And so you can expect volatility as this goes forward, and it's going to go on all year because none of what the president said is going to happen immediately is going to happen immediately. Tax bills don't get through Congress quickly, and tariffs take time to implement. So at this point, we're all on hold.
Spending time with Michael McKee here on Balance of Power. You were talking about confirmations right before you joined us. Mike, it does look like Scott Bassett will be cleared in the next couple of days. It's going to be a working weekend in the Senate, it appears, so Sunday, Monday, Tuesday, something like that. What's the first thing he does when he gets the job?
Well, the first thing he probably needs to do is sit down with his domestic finance people and talk about what kind of issuance of U.S. debt is going to happen going forward, given the fact that we have now hit the debt ceiling and they can't really issue much debt. They can only roll over debt, but we're going to see debt continue to pile up because we owe the money. So they're going to have to figure out, what do they look for from Congress? Do they raise the debt ceiling? Do they suspend the debt ceiling, which is what they did under Joe Biden? Or could they go all the way and get rid of the debt ceiling? That's kind of the first thing that's facing him. And then obviously he's going to be working on the tax packages to see what he can get out of Congress for the president.
They're talking about raising it by $4 trillion or something like that. I realize it's just talk right now, but this could be a doozy of a debate. And it's just one of these moments, once again, where Washington is driving the conversation on Wall Street. It's great to have you, Michael. Thank you so much. We always learn something from Professor McKee, especially on a day like this where you need a bit of clarity. We're going to be doing this a lot, potentially over the next 4 years, based on what we hear from President Donald Trump. I'm Joe Matthew in Washington. Good to see you. Thanks for coming along here on the radio, on the satellite, and on YouTube, where you can always find us. If you search Bloomberg Business News Live, we'll keep the live stream up for you always with a seat here in our studio just for you. You can subscribe to the podcast as well. Find us on Apple or Spotify. We'll have Mike Dorning with us coming up next. More on the confirmations and the debate over the congressional agenda, which is still not set. Much more ahead right here. This is Bloomberg.
Street. We do check markets all day long here at Bloomberg. We have got stocks hovering near records, oil moving lower after President Trump said OPEC should lower crude prices.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately.
And in remarks heard live on Bloomberg Radio, the president also said he will be pushing for interest rate cuts. U.S. stocks right now, we've got the S&P up 7 at a record 6,094, up by about 0.1%. The Dow up 250, that is a gain of 0.6%. NASDAQ, however, slumping. Chip stocks lower. Right now we have got NASDAQ down 50 points, a decline of 0.2%. 10-year, 4.64%, with the 2-year, 4.29%. Gold down $1.85 the ounce, down just about 0.1%. 27.54 on gold. West Texas Intermediate crude down 0.8%, 74.83 a barrel. American Airlines is warning of a surprise loss to start the year. American right now down by almost 8%. The weak guidance contrasts with robust outlooks from rivals United and Delta. UAL right now down 2.4%. Delta up 0.3%. Also reporting this morning, or actually last night, we heard from Alaska Airlines. Alaska stock up by 4.7%. Again, recapping, S&P 500 index up 0.7%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, great to see you, sir. Thank you so much watching Wall Street for us every day here. Aren't we lucky to have Charlie Pellet on the fastest show in politics? You never need to turn away. As we cover Washington, we always have the markets in hand for you, and we'll get back to Charlie in a little bit for another update. The message has been delivered at the White House, conveyed personally, verbally, individually, according to Politico. No drinking with members of Congress. This is quite a story. White House Legislative Affairs staffers and others in external-facing roles have been pulled aside and strongly encouraged to stop this activity, which, of course, was part of the first Trump term and tends to happen around here in Washington, D.C. New guidelines, quote, we strongly urged everyone in the Legislative Affairs Office and everyone who's externally facing to be thoughtful about their alcohol use in public, specifically with members. Mike Dorning has never had a drink with a member of Congress, which is partly why he joins us right now here at the desk. Bloomberg Capital Influence Deputy Team Leader. That's Mr. Mike Dorning. Good to see you, sir.
Great to see you.
That's not going to last, right?
That'll definitely be an impediment to your relations with Congress. But I don't know, there may be some people that they're afraid might over and by with members of Congress.
This is about leaks, right?
Yeah.
Is that the idea?
This is about leaks, but it's also about avoiding maybe an embarrassing situation that might crop up. But mainly, you're drinking with members of Congress to make them feel more comfortable sharing with you, but then they're drinking with you to
How's
make
anyone
you
supposed to get a story right?
more comfortable sharing with them. So, it's different than the way Washington usually
So you go down to the Waldorf Astoria, you're not going to see any members at the bar there, obviously. That's
well, the idea is the members might come.
Well, sure.
But the legislative affairs...
Is that the hangout? Is that the MAGA hangout, the old Trump hotel?
It was the MAGA hangout last time. I don't know that there's an established hangout.
You need to let me know when that happens.
Okay.
Producer James wants to go out.
It's worth going there just to... Because some people will be there.
They're already, there are a couple of places that are kind of in the running now to be the MAGA
But
bar.
it used to be you could just go down there
pick your official
any night and you'd run into people.
Yeah. Look, Bill Barr. All right, so we need to talk about what's happening in Congress here, or not happening. A series of meetings with leadership, but we still don't know exactly how the heck this is going to work with reconciliation when it comes to Trump tax cuts, all the things we've been discussing, and that includes the debt ceiling, by the way, and we're watching the clock tick here for a speaker who has a very thin majority, doesn't seem to have a way forward. Does it matter whether it's one bill or two? Can we get on with it?
Well, it matters for tactical reasons. It doesn't matter in terms of, at the end of the day, what your what impact the legislation would have on your life.
The president apparently doesn't care, so...
And it's right that he doesn't care in a broad sense.
Yeah.
You know, he should be, like, adjusting tactically to what the situation is in Congress. But at some point, you need the White House to say, even if, like, you know, it's not a theological issue for us, whether it's one bill or two, here's the way you troops have to go forward. Because if the White House isn't directing them, then it's harder for them to get on with each other. Because these Republicans are infighting, and they want to do this without granting any concessions to Democrats. So they've all got to be on one team.
Lawmakers are thirsty for direction here, right? They want to get writing. They want to get working. Confirmations are progressing around them. We'll have that conversation. I think, you know, we've been in touch with Mike Lawler, the Republican from New York, who's Mr. Salt.
Yes.
He had his
reasonably so.
Yeah, he had his hearing with the president earlier this week. That's just one of many components that have to be stitched into this.
So remember last time they had a larger Republican majority in the House, and so they just said, we don't need you, New York, New Jersey Republicans. And a lot of the Republicans from those districts actually didn't vote for the tax bill. Some did, but a lot didn't. Now the majority is so slender that they actually need them.
They need Republicans in Biden districts.
Yeah. So, and Republicans in districts where SALT hurts. Right. The SALT cap hurts.
So then they're actually,
they got to do
that's
something
real
for
leverage.
these people. It's real leverage, and you know, some of them might fold easily, but probably some of them are gonna demand real concessions to address this.
We're going to end up having a knockdown, drag out. We're going to talk about it for days and weeks, I'm sure, the debt ceiling and how the heck they're going to manage this. Is this part of reconciliation? Is it coupled with disaster relief funding so lawmakers have no choice but to raise the debt ceiling? How does this work?
So my guess is they'll keep trying different ways of addressing this until something succeeds. And you know, basically, Trump now on every vote wants to try to address this. So he'll start with the bill to keep the government open, or maybe if they have disaster funding or whatnot. But the Democrats are going to want something for this, and they're probably not going to give in until they get something. And it's a question of when they're willing to give them something that's worthwhile, or if you get Republicans to vote for it.
We were talking about the confirmation process a little bit earlier, and I left one out. Next week is going to be wild up there, right? You've got, now Tulsi Gabbard has a date that's a week from today, according to Punchbowl, so she'll be up Thursday. You're going to have RFK Jr. and Kash Patel testifying on the same day as well. That's the 29th, so next Wednesday.
Fiery confirmation hearings.
Yes, indeed. All three aren't going to make it, are they?
It's possible. I mean,
you're hearing Republicans express a lot of concern about Tulsi Gabbard, specifically.
Particularly the ones who think national security is like one of their important issues. And then RFK Jr. also, there's people who have real doubts about him for some of his unorthodox views. So far, people haven't really, come out and said for sure they'll vote against her and or RFK Jr. So people can have their doubts and express them privately, but at the end of the day, they got to vote publicly against Trump. And so far, on the Pete Hegseth nomination, here's a guy who has there's real criticism of his lack of high-level experience, and then a series of, types of allegations that normally might sidetrack someone, and it doesn't look so far from what people have said publicly that they are going to block this. Now, we'll have a test vote later today, and we'll get a better sense, but it shows that at the beginning of the Trump administration, at least, it's quite a hurdle for Republican senators to vote against him.
What can RFK Jr. say to calm some nerves? I'm not going to remove the polio vaccine.
That's one.
I mean, should we start there? Is it I'm going to let you have your GLP-1 since everyone on Capitol Hill is taking them. That you get to keep your Ozempic.
At least
Would
the
that get
year
him?
before they run for re-election.
Yes, exactly. I mean, what's the message that lawmakers want to hear?
They want to make sure that he is not going to undercut vaccination in America.
Yeah.
And they also need to hear and be reassured that his pro-choice views are not going to influence the way he runs HHS, that he's
So
willing
he's going to hit
let-
all these in his opening remarks, right? And then we'll see where the questions go.
My guess is that he will hit the vaccine things in his opening remarks. The abortion questions might be better done privately with assurances about, you know, people underneath him, and that he won't interfere with, you know, the second tier.
You say
appointees.
privately. That's an important word here. He will be the one to sit down, and has been, right, with Republicans and Democrats. A different strategy than we saw with Pete Hegseth. They were offended he didn't come to their office.
They were offended, but they were not going to vote for him.
Never going to happen. Yeah.
With RFK Jr., it's possible that at least one or two Democrats might vote for him. And these private conversations are very important in giving private commitments that they don't necessarily want to do in public.
Kash Patel is another one. This is, of course, Donald Trump's pick to be head of the FBI. Enrique Tarrio, the former leader of the Proud Boys who just got out of jail despite his conviction and sentencing on seditious conspiracy. He's name-checking Kash Patel in an interview with Alex Jones the other night, that he's going to come save the day, essentially. You've got this, what is it, Rhodes, the former head of the Oath Keepers, walking the halls of Congress yesterday. Kash Patel could have an interesting hearing coming up as well.
He for sure is going to have a fiery hearing. And there's real doubts from Democrats and other, even people in the national security establishment about, you know, what he's going to do with the FBI, particularly when it comes to their counterintelligence duties, which are real duties and is the FBI's job to do counterintelligence. The CIA doesn't do that. They do foreign intelligence. The FBI does domestic counterintelligence. So there's going to be all these doubts. And again, for people on the Republican Party who are defense hawks, who really have a strong interest in national security, they're like substantive concerns they have about it.
Right. Wow. What are they going to do with the Hoover building? Turn it into condos? I have to drive by that thing every night. It's interesting. If you know Washington and you know the brutalist FBI headquarters that is literally falling apart, we do wonder what might take its place. Good to see you, as always. Mike Dorning with a lot to talk about, and that won't be changing in the days and weeks ahead, so we're always glad to have Mike's reporting and leadership here in the newsroom. I'm Joe Matthew in Washington. Thanks for coming along. On the radio, on the satellite, and on YouTube, we'll assemble our panel next. Rick Davis is with us. Of course, Republican strategist alongside Democratic strategist Brad Howard. It's going to be a good panel with a lot to talk about today following Donald Trump's first Oval Office interview. Yeah, we'll walk through it together coming up right here on the fastest show in politics. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, they're both higher. NASDAQ in the red. Right now, the S&P trading at 6,092, up by about 0.1%. Could see a potential record close for the S&P 500 index today. The Dow higher by 280 points. That is a gain of 0.6%, while NASDAQ now lower by 81, a decline of 0.4%. 10-year at 4.64%, with a 2-year 4.28%. Spot gold, little change, just about flat on the day at $27.57 the ounce. West Texas Intermediate crude down 0.4%, 75.19 a barrel. Stocks are hovering near records as oil sank after President Trump urged OPEC to lower crude prices. Again, West Texas Intermediate down 0.3%. There are fresh signs of financial stress for American families. And that story, here's Bloomberg's Vinny Del Giudice.
With interest rates higher than before the pandemic, Americans are rolling over an ever larger portion of credit card debt. The share of cardholders making just minimum monthly payments rose to the highest in more than a decade during the third quarter of last year. Typical credit card rates are close to the highest on record, above 21%. The data are compiled by the Federal Reserve Bank of Philadelphia. Vinny Del Giudice, Bloomberg Radio.
And among banks with major credit card operations, J.P. Morgan Chase up 0.7%, Citigroup up by 1%, Bank of America up now by 2%. And speaking of Bank of America, President Trump in remarks at Davos, broadcast live here on Bloomberg Radio, accused Bank of America's CEO Brian Moynihan of limiting business with conservative clients, saying what you're doing is wrong. Again, recapping, S&P right now up 5, a gain of 0.1%. Balance of power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. Glad to have you with us here on the Thursday edition of Balance of Power. It's Little Friday, and we got a lot to talk about here. Beginning with the Delta smelt. This is something that Donald Trump has been talking about, and we're going to get into this right now because it came up in his first Oval Office interview. Donald Trump, not a big surprise, sits down with Hannity in the White House a couple of days after moving in, and the idea of California somehow restricting water resources in Los Angeles, making it difficult to fight fires, was part of the topic of conversation. You know, Donald Trump's been accusing Gavin Newsom of essentially withholding water, allowing L.A. to burn. Here's what he said last night.
That thing went for 4 or 5 days. Nobody was even fighting it because they didn't have any water. Their fire departments aren't funded properly. I don't think we should give California anything until they let water flow down into their...
It's from the north to the south.
This is a political thing.
Well, it is a political thing, as Donald Trump accuses Newsom of protecting an essentially worthless fish, as he says. That's the Delta smelt. And all they have to do is turn a valve. You've heard him talk about the valve. Must be this big valve up in Northern California. It takes a couple guys to turn it. The Washington Post dug into this, talked to Tom Holyoke, Western water expert, California State University, Fresno. Quote, "There is no valve," he says, unquote. The general counsel of Center for Biological Diversity, John Busey, says Donald Trump is scapegoating the fish. There's literally no real connection, he says, between the fires in Southern California and the protection of the Delta smelt. But we're going to do this anyway. And we'd like to get to the bottom of that. We'll spend some time doing that here on the broadcast as we assemble our panel. Rick Davis is with us, partner at Stone Court Capital, Republican strategist, joined today by Brad Howard, Democratic strategist, founder of Corcoran Street Group. Rick, it's good to have you back. Interesting selection for the first Oval Office interview on Hannity. It went so long they cut it in half. Part 2 runs tonight. Do you think they're going to turn that valve in California? This is like watching the movie Chinatown here.
Yeah, I mean, we're already, I mean, it wasn't even a full week, and we are getting into fact-checking the president again. And so I'm afraid that we're going to have 4 years of the media twisting themselves into pretzels, trying to figure out what to respond to and what to not. I mean, the Delta smelt is another classic example. You're going to find people who are going to make this the battle cry for water rights in California over the next year. Thank you, Donald Trump. What is his line? I'm putting people over smelt. That's
Yes.
kind of a election campaign phrase. Whether or not it's worthy of the presidency or actually causing any real trouble with the accessibility of water, who knows? But I think it's just really a canard to attack California and the liberal policies of Gavin Newsom, who has ambitions on the White House. So I think more fog than fact, but that is the administration we currently have.
That's very good. You're right. A day one memo. I have it in front of me, Rick. Titled Putting People Over Fish, directing deputies to route more water, this is a direct quote, away from the Delta to other parts of the state. The memorandum says putting people over fish, stopping radical environmentalism to provide water to Southern California. He's been obsessed with water for a long time, talking about the water in the shower. He talks about the toilet. He talks about the washing machine. I'm curious, though, to hear more about the interview. Rick, I guess Fox News does have a seat at the table here in this administration. Donald Trump spent a lot of time criticizing the network over the course of his campaign and, of course, following the election results in 2020. Is this what we're going to get, though? Will there be real hard-hitting news interviews, or we get kind of the sit-downs with the Hannitys and Tucker Carlsons of the world for the next 4 years?
Well, even though he's been tough on Fox in the past, he's not been tough on Hannity. I mean, Hannity is basically an advisor to the president. And so it wouldn't surprise anybody that he'd get the first real sit-down Oval Office. And that, most of the issues that are coming up are, sort of softball questions that lead Trump to talking about what he wants to talk about anyway. So it's not, and by the way, that's exactly what Joe Biden did for 4 years. I mean, that guy never did a hard interview in his entire presidency. And yet I would remind everybody that the night Donald Trump was sworn in, he sat at the Oval Office desk, invited the media in, and fielded every question that they had for a long period of time. So long form interviews, constantly talking to reporters on the record. I think that's a hallmark of Donald Trump presidency. The real question is, when does he make his first trip into the press room? He basically stayed out of there the first 4 years he was president. And the question is he going to come in to see everybody in this 4 years?
Yeah, no doubt. That's going to be right around the time this show's on the air, right? We're going to be doing a lot of that, it looks like, over the next 4 years. So he's going to L.A. tomorrow. He's going to make a trip to L.A. He's going to go to Asheville. And by the way, I'm glad to say that Brad Howard has joined us, of course, our Democratic strategist, who you know well from Corcoran Street. Brad, it's great to have you back. Donald Trump goes to L.A. He's going to probably school Gavin Newsom, as he has done in the past. Remember, in wildfires past in the first administration, he talked about how California needs to start raking the forest floor to prevent fires. That would be a lot of rakes, I guess. It would take a long time. Now he's talking about this big valve up in the north that they're going to turn like it's something out of the movie Chinatown. What are these optics going to be like tomorrow? What will Gavin Newsom allow? He's going to have to appear with the president, right?
Yeah, I mean, the reality is that you've got a situation that is a once-in-a-lifetime storm. You've got hurricane-force winds combined with a severe drought. There's no amount of maintenance that's going to prevent Mother Nature when she wants to, destroy. Yeah. And look, I used to represent the city of New Orleans as their spokesperson when I worked for Mitch Landrieu. We're approaching 20 years since Hurricane Katrina this year. And that storm was devastating, but it was made more devastating by, partisan gridlock and the inability to help people who were in need. And people needlessly suffered and died because our politics in the moment couldn't rise to the occasion. And I want to be very careful that we don't do the same thing in California, that the main focus is that people are suffering, people are homeless, and that the fires are still a threat. And so let's deal with all of that first, get money to the people in need, and then have a conversation about how to prevent in the future. But, they're essentially in the middle of their hurricane season, and these fires are not going to go away anytime soon.
I like smelts, by the way. You ever had fried smelts? I don't think they were Delta smelts, but you might be missing out on something there. And to close the loop on this, this is real. In the 90s, state and federal officials declared the Delta smelt threatened with extinction. So that required a certain amount of money a certain amount of water, rather, to go through the river system to sustain the species. The rest of the water is pumped to irrigate farms and serve as drinking water for cities. The water that goes to the fire hydrants, a completely different thing. Rick Davis, if you're advising Gavin Newsom, you have to see the president when he comes to California, right? I mean, he calls him Gavin Newscom all the time, like it's third grade. How do you manage that if you're an executive dealing with a tragedy like a wildfire?
Yeah, I mean, I think that it will probably be very difficult for Gavin Newsom to spend time with Donald Trump because Donald Trump has been not supportive, but very much attacking the governor on his handling of the fires. I mean, remember, it was empty reservoirs before it was the smelt, although he's been banging on the smelt for a decade. And the reality is, what's going to happen in a meeting with Donald Trump? Is he going to pledge support? Probably not. There's an active debate in the Republican Congress right now about whether they're going to attach conditions to federal support for California. And Donald Trump's even said in the Hannity interview, I believe, that maybe we should be looking at states having funds to deal with their own problems like this. So I'm not sure the welcome mat will be out. And if Gavin Newsom wants to play politics with it, he'll be at the site of the fires and not, in a press conference with Donald Trump. So I'd actually be surprised if he shows up. This is a long time from Chris Christie hugging President Obama when he comes in to sprinkle a little aid on New Jersey.
Oh, man. Rick, you'll be glad to know that it's not just Donald Trump. In a speech in 2011, Vox reporting this, the governor of Alaska, Sarah Palin, blamed the Delta smelt for destroying people's lives in the Central Valley. Quote, a faceless government is taking away their lifeline, water, all because of a 3-inch fish. Where I come from, a 3-inch fish, we call that bait. Brad Howard, will Gavin Newsom run for president in 4 years?
Yeah, I mean, he absolutely can. I think he's got a great story to tell overall when you look at what the governor, I mean, let's keep in mind, they love to insult California, but California's got, like the 7th largest economy in the world. They're a state that is people want to live in. It's, it's beautiful. It's got a lot of positive things that people love about it. And, and the good thing about our system that we've got is a situation where, Americans are more mobile than they ever have been. It's easier to pick up and move to another state. And, you're seeing a lot of states compete. Texas versus California is a big one. And Texas likes to brag about how their way of life is better and, foolproof. And yet one ice storm can debilitate their entire power grid. So it's just a reminder that at the end of the day, we're playing life and death with Mother Nature. And that at the end of the day, she is going to win every time. What we have got to do is understand that these problems are going to get worse because of climate change, not better. We're living in environments that we should not be living in, but we're going to make it work because that's what we do as Americans and as humans. And so I think the thing to reminder is there's a threat to everyone, everywhere in this country of some disaster. I mean, who'd have thought you would have floods in the hills of North Carolina? And no one there had flood insurance when you're up in the mountains. That doesn't make sense. And yet they had to deal with it. And, we didn't question whether or not they should have had flood, proof homes in the hills of, North Carolina. We gave them aid and help and try to get it out. So as we go through this debate, there's a lot of complex challenges, water being the #1 complex challenge on the West Coast. It's a scarce resource. It's vital to, everyone's way of functioning as humans. And that debate is not going to be had in a 30-second clip in politics is not going to help it by any means. And so we've got to get help to the people in need is my big case here. Let's tie conditions to aid later, but never to disaster relief. It only slows stuff down.
Well, I'll tell you what, like I said, he's going to Asheville on this trip as well. It's going to be interesting with a lot of the misinformation and disinformation that we heard around the response, around the damage, around what FEMA was doing. It'll be interesting to see how Donald Trump frames this when he gets to the region. Great panel, as I mentioned. Rick Davis and Brad Howard are going to stay with us in our second hour here as we turn our attention away from the Delta smelt to salt. There's got to be some crossover there. I'm not smart enough to come up with the joke. Yeah, Republicans talking about not just raising the cap. It's a question of by how much. Mike Lawler, the Republican from New York, was actually at the White House yesterday talking to Donald Trump about this, gave him the pitch. and is going to be with us coming up at the top of our second hour here on Balance of Power. The gentleman from New York will join. Kaylee Lyons will be here, and we'll welcome our global television audience as well. Thanks for joining, always on the radio, on the satellite, and on YouTube, where you can find us by searching Bloomberg Business News Live. We've got a lot more to talk about coming up here on the fastest show in politics, so stay with us. I'm Joe Matthew in Washington. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The question on salt becomes how high? Welcome to the fastest show in politics as talks to raise the salt gap gain momentum in Washington on both ends of Pennsylvania Avenue. I'm Joe Matthew, alongside Kaylee Lyons in Washington. Welcome to the Thursday edition of Balance of Power. This debate, Kaylee, has evolved from whether it will happen at all to yes. How high?
Yeah, and we're going to have more on this in just a few minutes with Republican Congressman Mike Lawler of New York, who was actually at the White House with President Donald Trump yesterday talking about salt. In the meantime, Donald Trump spent part of his day today addressing virtually the World Economic Forum at Davos, talking about lower oil prices, lower interest rates, and yes, Joe, lower taxes.
No doubt. He's going to demand lower oil prices, I guess, asking Saudi Arabia to pump more. I'm not sure demanding lower interest rates from Jay Powell is going to resonate, but we'll see what he says.
Yeah, the Fed chairman probably would beg to differ on that one. And while we're talking about all those things going lower, he has made it clear tariffs very well could go higher, as he talked about trade relationships he sees as unfair. And we're going to talk with someone formerly at the USTR, Sarah Bianchi, now at Evercore, will be with us as well this hour. But before we get into all that, we got to get a check on the markets. And Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much, Kayla Lyons. Indeed, we got the S&P 500 index trading at a record right now, 6,098. That is a gain of 12 points, up by about 0.2%. Keep it locked into Bloomberg to find out where things shake out at the close. The Dow up 346, up by about 0.8%. NASDAQ, though, in the red, trading lower. Chip stocks declining. We have got NASDAQ down 0.3%. 10-year 4.64%. The 2-year 4.28%. Spot gold right now up by less than $1. Little change there, $27.57 the ounce. And West Texas Intermediate crude down 0.5%, $75.07 a barrel on WTI. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. Here in Washington, of course, we've all been captivated by the first days in office of Donald Trump as he begins his second go at the presidency. And he has wasted no time executive ordering, using the office of the president to do everything he can unilaterally. But for all the stuff that comes next, he's going to need the cooperation of Congress, specifically, as we've discussed frequently on this program, when it comes to tax policy, hence multiple meetings about the legislative way forward at the White House this week.
Yeah, and a big one on salt. We talk about salt every day here because we're Bloomberg. And there's a question about how much can be fit into this package to extend the 2017 tax cuts, because that's going to compete with no taxes on tips, overtime, all the other proposals that emerged on the campaign trail. But this is a big one, and we know that Republicans from states like New York, particularly those who won in Biden districts, have an enormous amount of influence. Well, I should have said that probably. Have an enormous amount of influence over this process right now, because every vote will be needed to make it happen.
Yes, hence why you saw not just Republican leadership at the White House earlier this week, but yesterday, 3 key Republican moderates, one of whom is from the aforementioned state of New York. And he's joining us now live from Capitol Hill.
Indeed. Let's go to Mike Lawler, Republican from New York's 17th. Congressman, welcome back to Bloomberg TV and radio. It's a pleasure to have you live from Capitol Hill, because I know it's a busy time right now. To the extent that you can bring us in the room, the question of how high to raise the cap, I'm sure is something you discussed with the president. How did he respond?
Well, first, thanks for having me. I'm not going to get into the specifics of the conversation out of respect for the president, but I will say, obviously, it was a very productive meeting with the president. A great opportunity for myself, Brian Fitzpatrick, Don Bacon, the 3 of us who won districts that Kamala Harris won, juxtaposed to 4 years ago. There were 18 districts that Republicans won, that Joe Biden won in 2022. So, obviously the country has moved rightward. These districts have moved rightward. But there's 3 of us left in Harris districts. And so it was a good opportunity to sit down with the president. SALT did come up, of course, and the president reaffirmed his support for lifting the cap. We talked extensively about it down at Mar-a-Lago just 10 days ago with a group of us from California, New York, and New Jersey. But this is key. I mean, I've been very clear on this issue. If we do nothing, if we pass no tax bill, SALT comes back unlimited, which I would support. But the problem is that it would be associated with the largest tax increase in American history. The alternative minimum tax would come back, which would have a detrimental impact on New York. So, we have to negotiate in good faith. It's incumbent on everybody to do that. We are working through the numbers right now with the Ways and Means Committee to come up with a number that actually will provide real tax relief to middle-class families. This is not an issue of the uber wealthy or rich. This is not an issue of those awful blue states. This is an issue of fairness. It's an issue of double taxation and providing real tax relief to working families.
Well, when you say working families, we've had sources telling Bloomberg that in a listening session yesterday, Congressman Fitzpatrick actually suggested that he's worried about the Republican Party having a disconnect with what is increasingly its base versus those who might be able to benefit from something like an elevated SALT cap. Congressman, were you a part of that? What have your conversations been with some of your colleagues, not from these blue higher tax states, about the way forward on this?
Well, I'll let Brian speak for himself, and I'm not going to discuss what occurred in conference. But I will say, obviously, when you look at the coalition that President Trump built, it was comprised of working-class families. It was comprised of union workers. It was comprised of folks who, day in, day out, are working to put food on the table, to pay their mortgage, to pay their car loans, et cetera. So we have a responsibility as we work through this tax bill to focus on the issue of affordability, to focus on the issue of tax relief for middle class and working class families. And that is really what all of us are focused on. Obviously, you know, when you look at historically some of the policies that have been pushed by some Republicans within the conference, you know, that may be at juxtaposition with where the party is today, and certainly where our base is, and certainly where the coalition that Donald Trump put together is. And so I think a key part of this is obviously what the president wants. He's talking about no tax on tips. He's talking about lifting the cap on salt. That is certainly, you know, a little bit different than obviously where the party was in 2017 when the Tax Cuts and Jobs Act passed.
Right, and of course, your legislation, we could remind our audience, calls to lift the cap on salt to $100,000 for single filers, $200,000 for married couples, your SALT Fairness in Marriage Penalty Elimination Act. We want to have a broader conversation about taxes, Congressman, but while we're on the matter of SALT, you've said some of your fellow Republican lawmakers are, quote, reflexively opposed because they think they're subsidizing bad blue state policies. You referred to that a second ago. Why are they wrong?
Well, first of all, New York is a donor state. We send more in tax revenue to the federal government than we get back. I don't disagree about the disastrous leadership in New York or California under Kathy Hochul and Gavin Newsom. And in fact, the policies in New York do need to change. The tax burden does need to come down. The overall cost of living and cost of doing business does need to come down. And I've long advocated for that. But folks shouldn't be penalized for living in these states. And the fact is, there are red states in which they get more money from the federal government than tax revenue they send to the federal government. So, you know, if we want to get into the whole argument about who's subsidizing who, we can do that. I don't find that overly productive. I think the bottom line here is we want to have a tax bill that provides broad-based relief. If you look at where people are today from 2017 and the median household, the fact is that in 29 of 50 states, they blow through this $10,000 SALT cap with their tax burden on property taxes, income taxes, et cetera. So, you know, what may have made sense to some of my colleagues back in 2017, I think in some of these states they're starting to see that $10,000 cap is woefully insufficient and really does cause harm to taxpayers. So, look, we're working through this. I have confidence, certainly in my conversations with the president, that we are going to get a tax deal done that does lift the cap on salt and really provides real tax relief to middle-class families.
Well, Congressman, as I'm sure you well know, the president addressed the World Economic Forum at Davos earlier today. You yourself virtually joined a panel related to NATO over the course of Davos this year. And I do wonder what you make of his remarks specifically. And as we heard him, or at least saw him post on True Social yesterday about trying to bring Russia to the negotiating table to end the war in Ukraine. How are you viewing this through your lens as to whether or not Russia is ready for that and whether or not Ukraine is going to be able to negotiate good terms with Russia at this point?
Yeah. Well, I think, President Trump is absolutely correct to start to apply pressure to Vladimir Putin to come to the table and end this war. I've been very clear in my support for Ukraine. I do believe Russia, China, Iran, and North Korea are engaged in an unholy alliance that seeks to undermine and destabilize the United States, Israel, Europe, and the free world. But we cannot have endless conflict. And I think President Trump is beginning that negotiation, extending out a hand to come meet him and have a conversation about how we bring this to a close. We have spent hundreds of billions of dollars supporting our allies, supporting Ukraine, supporting NATO in this effort. But when you see, for instance, Europe purchasing gas from Russia and helping fund Russia's invasion of Ukraine at the same time while they're trying to guard against it, you see some of the foolishness that has been going on. The Biden administration was extremely weak. The fact that Joe Biden did not speak to Vladimir Putin in any meaningful way over the last 3 years contributed to allowing this conflict to continue uninterrupted. So there's a lot of work ahead, not just with respect to the Russia-Ukraine conflict, but obviously the Middle East and with respect to China and the Indo-Pacific. President Trump is here now to reassert America's role in the world and reestablish peace through strength and reverse many of the policies of the Biden administration that created this tinderbox that we find ourselves in. And that was in part what I discussed last night, overnight, with Joni Ernst and Ambassador Grinnell when we spoke before the conference in Davos.
All right, Congressman, we appreciate you joining us in the aftermath. That's Republican Congressman Mike Lawler of New York here on Balance of Power live from Capitol Hill. And as we were discussing with the Congressman, Donald Trump obviously spoke at Davos earlier today, where he talked about a wide variety of subjects, including the speed with which he has been moving since taking office on Monday.
My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people and to solve every single crisis facing our country. This begins with confronting the economic chaos caused by the failed policies of the last administration.
The other thing he wants to confront economically, according to his remarks, is what he says is the trade deficit with the EU, that something should be done about that he wants to have a fair relationship with China. All of this as he was talking once again about tariffs today with those gathered at Davos and, of course, the CEOs that were questioning him. So for more on this, we turn to Sarah Bianchi. She's former Deputy U.S. Trade Representative during the Biden administration, now Senior Managing Director and Chief Strategist of International Political Affairs and Public Policy at Evercore ISI. Sarah, welcome back to Bloomberg TV and Radio. As we just heard the president there talk about how he's doing a lot of things very quickly, enacting new tariffs is actually not one of them, even as he suggests maybe we're looking at a deadline here of February 1st for Mexico, Canada, and China. But how are you viewing the way in which he, if not slow walking, does seem to be at least thinking through and calibrating the way in which these levies are implemented?
Yeah, it's a good point. He put out a framework on Monday, but that was a far cry from some of the detailed policies that he had spoken about. He had said he was going to do 25% a tariff on Canada and Mexico on Inauguration Day. I think what's going on is that his team on this issue does have some divisions. That's how he likes it on trade. He has a very, very pro-tariff part of the community with the USTR. nominee and others, but also some who are less comfortable. And I think he does understand, actually, this economy is in pretty good shape, and he does have some anxiety in the markets, particularly in the bond market, about inflation and about tariffs. So I think they're trying to calibrate. I don't put much stock into the February 1st deadline, but I do believe that Donald Trump always comes back to tariffs, and our projection is that with due time, we will get tariffs not only in China, but in other parts of the world.
Sarah, it's good to have you. What did you make of the tone of this conversation? Dear leader, the way that Donald Trump was showered with compliments, everyone there, the elite being so deferential to the president, not terribly concerned with, he even kind of insulted Brian Moynihan while he was at it, who thanked him for his service. They talked about his family. What does it tell us about the influence that Donald Trump has over the titans of this industry, finance?
Well, for right now, Donald Trump is at the height of his power. And I think a lot of leaders coming in understand that this is a very, very transactional president, and that working with him when possible has big advantages. We could ultimately, we'll start to see that splinter a little bit. Again, we are in inauguration week. That is the, again, the height usually of support. And look, there's some things that Trump wants to do that they welcome. An easier M&A environment, some things on digital taxes. So I think they're willing to kind of take some of the side swipes that come along with that. But ultimately, as we get into the agenda, the markets are worried about deficits. They're worried about these tariffs. Business leaders are too. So the governing, the hard part is still really yet to come.
Well, and when we consider the deficit, and we were just having a conversation about looming tax cuts with Republican Congressman Mike Lawler, which could help to balloon the deficit if there's not offsets to it. Donald Trump also views things like tariffs as not just a way to recalibrate trade relationships that the U.S. has with other countries, but also as a way to raise revenue. And I wonder, Sarah, if you can just give us a reality check as he's touting this external revenue service as to what that revenue would actually look like with the kind of figures that he has floated to this point.
Well, the challenge that he has is that a number of tax cuts, and you all, I heard, we're just talking about SALT, and that's even more money, and they're not that interested in spending cuts. So there's a real, the hard facts of numbers are a real challenge for this president. And the other challenge that they have is lots of the tariff stuff they can do through executive order. But our Congressional Budget Office and our budgeteers don't count that as revenue when it's done that way. And so they're trying to find a way to get credit for that money. I don't put a ton of stock in it. I think, look, they're right in the sense that if they do more tariffs, more revenue will come in, the deficit will go down. Who collects it is really just kind of a Washington accounting gimmick, really, and designed to show. But it does raise revenue, and I don't think Congress is particularly interested in legislating these tariffs. So I think he's trying to square that circle.
Well, it's interesting because Scott Bessent would tell you can't have one without the other. It's the combined effect, right, of the tax cuts and tariff policy that they say will, in fact, raise enough revenue to lower the deficit. Are you suggesting that there might be some sunlight between the two? Donald Trump, with the stroke of a pen, gets the tariffs. This tax debate's going to be tortured as we make our way further into the year. Could we be in a world where we've got tariffs but no tax cuts?
I think ultimately they're going to get a tax bill done. It's just really complicated given the deficit situation that we're in. And despite the Secretary of Treasury nominee claim that we can reduce the deficit, there aren't any really hard plans. And the problem is the numbers get sticky. Most of the deficit in government spending comes from Social Security, Medicare, interest we pay on the debt. And if you don't want to touch those, very, very challenging. So some of the things that he's doing with DOGE and other issues are welcome initiatives, but I don't see any plan right now that does. They're lucky if they keep the deficit even. I expect the more likely scenario is that it goes up.
Sarah, something else we heard the president talking about today is the ongoing war between Russia and Ukraine. This is after he took to Truth Social yesterday saying that Putin needs to come to the negotiating table. It can be done the easy way or the hard way. And he outlined the hard way as being greater sanctions, but also taxes and tariffs on Russian imports or exports being imported into the United States. To what extent is that actual usable leverage against Russia, given the relatively small amount that we actually do import from the country, given the ongoing war and the fact that there already are sanctions which were tightened just at the very tail end of the Biden administration?
Yeah, I think that you've outlined it exactly correctly. The Biden administration's taken a lot of action took a lot of action to tighten sanctions. Potentially, one could do more. That is going to be more impactful on Russia than any tariff on an import into the United States, which, as you noted, is a small part of the challenge. But look, I think it is. I'm glad to see Trump talking tough on Russia. I think some of us were concerned that given the pressure that he feels to sort of get a mission accomplished with on this ongoing geopolitical issue, as well as many others, he definitely was hired in part to address these quote forever wars. I think some were concerned that he was going to cut a deal quite quickly that might not be advantageous to Ukraine. So we'll have to see where it all lands, but I don't blame the president now for starting the conversation by talking tough.
Sarah, it's always a pleasure to have you. Former Deputy U.S. Trade Rep, now Senior Managing Director, Chief Strategist of International Political Affairs, Public Policy at Evercore ISI, Sarah Bianchi with us once again on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. I had to stop down when she said it's still inauguration week.
I know.
It's the same week. It's only Thursday. All right, why don't we stop down before we assemble our panel? Rick Davis and Brad Howard are with us straight ahead. We want to get a check on Wall Street for you. Charlie Pellet has the markets covered for us in New York. Hey, Charlie.
Hi, thank you very much, Joe and Kaylee. Indeed, right now we are looking at the best level of the day on the S&P 500 index. Not just the best level, but the S&P trading above 6,100, back at 6,103 right now, up 17. That is a gain of 0.3%. Could see a record close today. We've got the Dow up 372 now, up 0.8%. NASDAQ, however, trading lower. Little change, down by about 0.1%. Stocks are hovering right around records as oil sinks after President Trump urged OPEC to lower crude prices, also saying he will push for interest rate cuts. Right now, the 10-year, 4.64%, with the 2-year, 4.28%. Gold flat on the day, $27.56 the ounce. West Texas Intermediate crude down 0.9%, 74.77 a barrel. And Bitcoin now up by 1.4%, 105,500 on Bitcoin. Global semiconductor stocks from ASML Holding to NVIDIA are all lower after SK Hynix earnings left investors questioning whether demand for artificial intelligence will live up to sky-high expectations. Among those chip names, ASML, the ADR is down 3%. Advanced Micro Devices right now down by 0.2%. Intel down 2%, and NVIDIA down by 0.7%. Recapping the Dow, the S&P higher, NASDAQ is trading lower. S&P right now, to put it all in context, up by 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much indeed. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we had our eye on Davos today as Donald Trump, in his 4th day as president, once again, as the 47th president of the United States, addressed the World Economic Forum and fielded questions, not from the press, as we've already seen him do a few times this week, which focused largely on domestic issues like the January 6th pardons or ending birthright citizenship, some of the executive orders that he's rapidly doled out in the first few days of his administration, but instead from business leaders. Brian Moynihan got to question him, Anna Bhutan, Patrick Poyan, the Total Energy CEO, and Steve Schwartzman, who of course is close with Donald Trump, got to throw him a question as well. And it was interesting, as he's addressing the business community about some of these economic issues, we got a lot of pretty similar answers, we've included, despite the audience.
After quite the round of compliments from the
Yes.
folks that you mentioned. This was an interesting exercise, and I guess to your point, he didn't always answer the questions he was being asked.
Yeah, at one point, Anna Boten actually asked him about banking deregulation, something that he's long promised, and it turned into the Green New Deal and Russia and Ukraine, and I'm not sure we actually got much clarity on the deregulatory front, to be honest.
Is that the weave? That's the weave?
That's the weave, yes. He's known for it.
Our panel knows how to weave. Rick Davis is with us, Republican strategist, partner, Stone Court Capital. And Brad Howard, our Democratic strategist, founder, Corcoran Street Group. It's great to have both of you here. Rick, what do you think when you watch an exchange like that, the showering of compliments, in many cases the lack of an answer? What will be Donald Trump's relationship with the elites, the titans of finance, say a year from now after this goes on and we're beyond, the honeymoon phase?
Yeah, I think you've seen the supplication of corporate America to Donald Trump. I mean, all we've seen since the election, not even the inaugural, is companies showering the White House and the president-elect with commitments to make massive investments in U.S. infrastructure, to cooperate with the administration on his initiatives. Really, no blowback to any of the more controversial economic plans Trump has around tariffs. So at the bottom line is, I think he's firmly in command of the infrastructure around corporate America and investment. And I think you'll see that continue throughout the year. I mean, think about it. I mean, all the questions he got today, he was pretty feisty, right? I mean, he pushes back on, the CEO of Bank of America about not banking, conservatives. His wife has some experience in that category. He even pushed back on the Crown Prince of Saudi Arabia, who offered $600 billion in investment to the United States. He says, well, I'll get him to $1 trillion before he even blinks. I mean, what's wrong with $600 billion? So, yeah, I think you see them in sort of full bloom. Donald Trump with the media, with corporate America, frankly, with most of Congress. He's dictating the terms of his presidency, and right now he's getting away with it. The question is, does it all catch up to him at a certain point in time? Probably no time soon.
Well, Rick, there is one thing he doesn't seem to be getting away with, at least for now, and that is the executive order he signed earlier this week, ending birthright citizenship, something that is actually enshrined in the Constitution via the 14th Amendment. The first legal hearing regarding that was heard in federal court in Seattle this morning, and that judge, U.S. District Judge John Coffenauer, has now temporarily blocked Trump's birthright citizenship order. It was 4 states who had brought this challenge, Joe: Washington, Arizona, Illinois, and Oregon, all of them contending that this violates the Constitution because of the 14th Amendment.
Well, so we're reminded here, and this feels familiar if you remember the first term, that not all of these executive actions will be able to hold up in court, never mind actually be implemented here. Brad, your thoughts on this? I'm sure you took note when that executive order was signed. Is this over?
Well, look, let me first of all say a couple of things that on the when you go back and look at the SALT deduction, that's a benefit that if it brings back will almost 96% benefit the upper middle class. The upper class, only 4% would go to tax relief for the middle class. So that's why Democrats got rid of it. My boss was on the Ways and Means Committee when we wrote this. It's the reason why it's good tax policy and it's good public policy because it's shifting the burden to the higher taxpayers. And then when you talk about trade and tariffs, I'm reminded back that my former boss, Congresswoman Stephanie Murphy out of Florida, probably the most pro-trade, anti-tariff Democrat you will find in the Democratic Party. She was, in fact, the lone vote on the original CHIPS and Science bill because it dove too much in that area. But, her 8-year-old got caught in school reciting what she says all the time, and he was telling a kid that tariffs are taxes on the American people. So they are. I mean, here's the thing: the consumers are going to be paying the taxes these consumers are going to be paying the increased costs associated with these tariffs from all the goods we rely on from all over the world, and so it's going to be a Trump tax. And it's ironic they're talking about a Trump tax plan when the tariffs are going to cause an increase in prices we all pay for things here in America. And I think he's going to have to account for that. And that may be why you see him slow rolling some of these things. And then when you look at the executive orders, he's not even going as fast as he wants to because congressional Republicans have asked him to slow down on the executive orders because a lot of the things he is doing is saving money, and they want those savings in the reconciliation tax cut bill that they're proposing. Because if anyone, I don't know how familiar you are with reconciliation, that's how I became kind of a process expert in the House, was when we had reconciliation to deal with. You has to be fully paid for. You cannot have a deficit. It'll get ruled out of order by the Senate parliamentarian, and you have to start from scratch. So it has to be fully offset. Republicans are trying to claw any dollar they can as savings, and anything that Trump may do by executive order that saves, they can't take credit for. So they would rather legislate it than have them sign the executive order.
Well, we do know that reconciliation package ultimately is expected in whatever form it takes to address not just tax policy, but also energy and border and immigration policy, knowing that there are legal limits potentially to what the Office of the Executive can do, which is evidenced again by our breaking news here that a judge in Seattle has temporarily blocked Trump's birthright citizenship order. The order, of course, was ending the right to birthright citizenship, which the judge in this case, Rick, is calling blatantly unconstitutional. This is what the states who challenged it were arguing. It violates the 14th Amendment. Where do you see this going from here?
I would be surprised if the Trump administration really pursues it that hard. I do think you have to understand that there's a good amount of effort that Donald Trump puts out that is performative, right? I mean, this is the era of performative politics, and he is the master class of it. And I never thought that his attacks on birthright citizenship were anything other than performative. It fires up his base. It's the cultural right edge of immigration attacks. He'd kind of worn out most of the other rhetoric that he had about rolling up illegal immigrants and shipping them away. And so this gave a new sharp edge to this election cycle that he didn't have before, but there was never actually articulated in his campaign or even in the executive order from his counsel's office or the Justice Department, what the legal basis for this is. And so having no legal basis for it means it's probably just a political act. And within that, probably not a whole lot of capital is going to get burned on it. So I tried to do the right thing, and these liberal court justices, kept me from doing it. I think we're going to hear a lot of that over the course of the next week.
Yeah.
By the way,
so Rick's onto something here, right, Brad? I mean, it's not about actually getting it done. It's about being caught in the act of trying, right?
Well, this is what Joe Biden has tried to do with student loan debt relief, right?
That's absolutely right.
He tried it by executive action. Every president's tried this. I think Obama tried it in the climate change space with a lot of different executive orders. They were either ruled unconstitutional or overturned the minute Trump got into office. And this is the problem with executive orders. The next president can just undo them on day one, which is a big part of what Trump did. Nothing he really did was new. He just undid a lot of stuff. And look, I'm an Article 1 supremacist here in the sense that I think Congress should be the body that is enacting policy and making these decisions. The role of the executive is to carry out the orders of Congress. And so, an ever-growing power centralization of the executive is very alarming to me because it disrupts our system of checks and balances. But, Rick's absolutely right. I mean, there's no harm in trying, and he gets a check with his base, and there's no harm, no foul here, and it's all upside. This is where Trump is particularly smart and effective. He understands these moments where he can claim a win and then move on and dismiss it. And I think you're going to see a lot of this over the next 4 years. I do think at some point Republicans are going to start to resent a lot of the just constantly being told what to do as legislators. Thune is kind of hinting at this, the new Senate Majority Leader, and it very much falls in the kind of frame of Mitch McConnell and how he was majority leader. There's going to be certain things that Trump is going to that the Senate is going to let him do. But Republican senators, they want to claim their jurisdiction and their own, put their own take on things. And you're going to see that battle, I think, start to emerge over the next 4 years, for sure.
But on issues like the border and immigration, Rick, should we only be looking at Republican senators here? If you take a look at what just happened this week with the passage in both chambers of the Lake and Riley Act, for example, with Democratic support, does that not signal on this issue in particular, Democrats seem to be having some kind of come to Jesus about where exactly they need to stand?
Yeah, I think actually what Trump said on the campaign trail has merit, which is there are issues like Dreamers that Trump, the Republicans, could work with Democrats to forge some kind of comprehensive program. And he's also said repeatedly that what he's against is illegal immigration, but that he understands the need that businesses have for being able to get legal immigration to help support the economy. And so how does that become a comprehensive immigration bill, right? That has become such a four-letter word over the years that it's very hard to say what you want in the context of a broader immigration package. But I do think there's a deal to be done there. And I do think the Lincoln-Riley Act is indicative of the fact that there is more in common, especially in the Senate, between Republicans and Democrats on the border than we have typically thought. And frankly, Democrats can thank Joe Biden, because the fact that he did virtually nothing over 4 years to contain the border has softened up the Democratic congressional vote.
All right, Rick Davis and Brad Howard, our political panel today, thank you so much for joining and dealing with this breaking news. Again, a judge in Seattle has temporarily blocked Trump's order overturning birthright citizenship. We'll have more still ahead here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. As we have been reporting, a federal judge in Seattle has temporarily blocked Donald Trump from restricting who is eligible for automatic U.S. citizenship at birth in an early legal setback for the new administration's hardline immigration agenda. The judge called Trump's executive order, quote, blatantly unconstitutional. U.S. stocks pushing higher. We have got the S&P 500 index now trading at a record 6102, where we stand up by about 0.3%. Dow Industrials higher as well, up 330 now, up by 0.8%. NASDAQ down 23 for the NASDAQ Composite Index, a drop now of 0.1%. Russell 2000 index of small cap shares up by 0.3%. 10-year 4.64% with a 2-year that's currently yielding 4.28%. Spot gold little changed on the day now at $27.55 the ounce, down less than 0.1%. West Texas Intermediate crude oil 74.57 a barrel, down now by 1.1%. Bitcoin up by 1.4%. Bitcoin now at 105,560. Earnings news, General Electric up 6.6%. Union Pacific after earnings up 4.8%. And after earnings, Freeport-McMoRan now lower by 2.3%. Recapping, S&P at a record up 15, now up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much. Watching Wall Street for us every day here on the fastest show in politics. Indeed, I'm Joe Matthew alongside Kaylee Lyons in Washington, D.C. Balance of Power, the early edition. And we do have breaking news here, Kaylee, and it has to do with Donald Trump's confirmations, his nominee, specifically in this case, his nominee for Defense Secretary, Pete Hegseth. We've been counting the votes here. It does appear, just to be straight up on this, no matter who we talk to, Kaylee, Democrat or Republican, they tend to think that he will be approved. He will be confirmed as Defense Secretary, but we do now know that there is a Republican vote that he has lost. The senator from Alaska is not on board.
Yep, Senator Lisa Murkowski just putting out a statement on X in which she speaks about her concerns regarding Mr. Hegseth. She talks about how she is concerned about the message that confirming Hegseth would send to women currently serving and those aspiring to join. She also talks about character, noting not just allegations of sexual assault and excessive drinking, but behaviors she says Hegseth has admitted to, including infidelity on multiple occasions, and which demonstrates to her a lack of judgment that is unbecoming of someone who would lead our armed forces. She says, above all, I believe character is the defining trait required of the Secretary of Defense, and ends her statement saying, I regret I am unable to support Mr. Hegseth. That is one, Joe. 3 no's he can get through because J.D. Vance would provide a tie-breaking vote. 4 no's, though, he wouldn't be able to.
And we have a sense that Susan Collins and Mitch McConnell may not be on board, so that 4th vote will be critical. We've also learned, by the way, that we're going to have a flurry of confirmations next week. Pete Hegseth may not, in the end, have had the most dramatic session. Remembering, he did not meet with Democrats. He knew he would likely not get a single Democratic vote, and the members from the other party certainly assured him of that when you heard from Tim Kaine, Elizabeth Warren, Tammy Duckworth, and others.
Yep, and as you say, more fireworks to come next week. But we're dealing with these headlines now. And joining us for some live reaction from Capitol Hill is a member of Congress who represents a district that has a large military population. Congresswoman Jennifer McClellan of Virginia's 4th District, the Democrat, is joining us now here on Bloomberg TV and radio. Congresswoman, thanks for being here. I do wonder what you are hearing from your constituents, specifically the ones who are going to have to report up through the chain, ultimately to the Secretary of Defense, what they think about Mr. Hegseth.
I am hearing a lot of women who are in our armed forces that they are concerned. First, his comments opposing women in combat, many of whom are decorated and have acquitted themselves very well. With his own sexual assault allegations, there's a concern that it would halt or reverse progress that we have made addressing sexual assault in the military and creating an environment less hostile to women in the military. But I'm also hearing concerns about his drinking and the fact that you need to be sure that you have someone who will decide whether we attack someone or who could decide to what extent nuclear weapons could be used. Having the presence of mind and not being impaired, and there are concerns about Mr. Hegseth in all of those areas.
The Senator, Congresswoman, wrote about the message that it would send. I remain concerned about the message confirming Mr. Hegseth sends to women currently serving and those aspiring to join. And that's the part that I want to ask you about, what that might mean in your view for recruitment, for attracting new talent in a massive Navy hub like Norfolk.
I would say, and I have been saying since he was first announced, that his appointment would have a chilling effect on attracting and retaining the best and the brightest in our armed forces, women, also minorities, and making sure we have done a really good job making sure that our armed forces reflect the diversity of the country that they defend. And we've had challenges meeting some of our recruitment goals for a wide variety of reasons, and Mr. Hegseth would add to those problems if he were confirmed.
Well, so as you speak to the reflection of the country the U.S. military is defending, what do you make of the unwind of DEI programs across the federal government as of last night, but the Pentagon included?
I'm very concerned about it. I mean, these go so far as to even to rescind a 1965 executive order from President Johnson that applies to contractors, federal government contractors. That includes contractors that serve our military, contractors that build our warships, and it basically means now there's nothing prohibiting them by executive order from engaging in discrimination against employees simply for who they are. It's appalling and undoes so much progress that we have made over the past 60 years.
Well, Congresswoman, our viewers and listeners are going to get a good sense here of how important your district is and some of the issues that we're talking about. As Kayleigh mentioned, Virginia's 4th district, that DEI undoing, if you will, and we understand now, according to reports, that the administration is actually asking federal workers to rat each other out if there are DEI processes left in place. It's going to end up with a lot of layoffs. You have a lot of federal workers in the state of Virginia. You also have a lot of veterans, and this could impact some veterans programs as well with the undoing of DEI. When you put that all together, what's the net effect? How many people could lose their jobs?
Well, we have over 200,000 federal employees and contractors and over 140,000 veterans. It's already having an effect. The VA hospital in my district had a meeting yesterday to talk about how it was going to impact their ability to provide services to veterans. They were about to open a new VA hospital in Fredericksburg, Virginia, less than 30 minutes away from my district. Now they're not sure they can do that because they can't hire the staff to staff it. We've seen VA hospitals in other states that have rescinded employment offers to nurses. We already have a nursing shortage. We are already struggling to meet the healthcare needs of our veterans. This is going to make it worse. The VA is concerned they're going to have to start sending veterans to hospitals, in civilian hospitals in the region. They are already struggling with nurse and provider shortages. This is a mess. And this is not what the American people voted for when they voted for Donald Trump. They thought they were voting to reduce costs. Instead, he is burdening our veterans, he is burdening our soldiers, and he is burdening our military families.
Well, we really appreciate your insight into these matters, Congresswoman, as we consider as well where this administration is now sending our soldiers with the deployment of troops to the U.S. border. Do you see this as an appropriate use of the military, considering he has declared an emergency?
Well, what we need to do and what Democrats were ready to do with Republicans last Congress was pass an immigration border security bill that invests in Border Patrol agents and put them on the border so that our armed forces can do the job they were trained for, and that is to serve our needs both here in bases but also overseas.
What are you concerned about as we consider the impact in your district that changes to military policy would have here when it comes to climate, when it comes to resources, shipbuilding, et cetera? This is something that Donald Trump has talked about a lot when it comes to the proposed purchase of U.S. steel. Is that a conversation that you'll be part of, considering your district and your constituency on Capitol Hill?
Absolutely, absolutely. I mean, first of all, as a member of the Armed Services Committee in the last Congress, when I went to Norfolk Naval Station and asked their commanding officer, what is the number one thing that keeps you up at night? She talked about the fact that when they have heavy rains, not just increased storms and higher intensity storms, but heavy rains, there is a street that bisects that naval station that floods, and she can't get her people from one side to the other. How is she going to be able to deploy ships in an emergency or when they are deployed if she can't get across the base because it's flooded? And by rolling back all of the efforts that we have made to address resiliency and climate action, particularly in the Navy, in the armed services, what the president is doing is ignoring the impact that climate change has on military readiness and on our soldiers' ability to do their job and, frankly, their quality of life.
As we consider climate change, Congresswoman, of course, we all have our eyes on the West Coast with fires still raging in the Los Angeles area. And I'm sure you're well aware that there are colleagues of yours in the House on the Republican side who are suggesting any emergency aid for LA should be conditioned and that it could be leveraged to get Democratic votes on other matters like raising the debt ceiling, for example. Where do you come down on that?
This is a Rubicon Republicans should not cross. The American people expect their government to solve problems and help people, particularly when there is a natural disaster. There are people in California that voted for Mr. Trump. There are people in California that voted for Kamala Harris. There are people in California that did not vote at all. But they all expect their government to help them in an emergency. And we have never conditioned aid in a natural disaster. And there's so much misinformation that they're even using to justify these conditions, but they're ignoring the fact that it is difficult to fight a fire in hurricane force winds. So we need to make sure we're doing everything we can in California and North Carolina and anywhere else to address the needs of the American people, especially in a natural disaster.
Well, so how do you work against mis and disinformation, whether it's in Asheville, and we heard a lot about that when FEMA showed up following the hurricanes, or now in California where Donald Trump says Gavin Newsom only has to turn a valve, that he's refusing to provide water to Los Angeles. A lot of people are going to believe that. Donald Trump's on his way there tomorrow, Congresswoman.
Well, I think we need to make sure that all of us, this is an all-hands-on-deck moment. It's me as an elected official. It's you as a member of the press, making sure we are calling out this misinformation and that we are countering it, but in every medium where people will receive their information. And so that's what we need to make sure we are doubling down and being more aggressive. Whether you get your information from social media, your neighbor next door, we've got to make sure that we're giving you the truth.
All right, Congresswoman, well, we just have a minute left here, but I do wonder as we look ahead to Monday and the Republican conference meeting that will be happening in Florida that Donald Trump will attend, as they're discussing their legislative agenda, border measures, energy measures, tax-related measures they would like to implement. Are they going to be able to count on any Democratic votes for any of these things? Could this be a bipartisan process?
Well, they have proven that even with a 5-person majority, let alone a 1-person majority, they are unable to do anything without Democrats because they fight each other. Democrats stand ready to work together to meet the needs of the American people and to put people over politics. Republicans are going to have to come to the table and do that, but we are not going to violate our values. And those values include making sure we are centering people, that we are centering their needs and helping them, that we are not pitting one group of Americans against another, and that we are protecting our democracy. So if they want bipartisan help in governing, we stand ready to meet the needs of the American people, but they are going to have to come to us and not just expect us to bend the knee and to their will and violate our values.
All right, Democratic Congresswoman Jennifer McClellan of Virginia, thank you so much for joining us here on Balance of Power as we round out this early edition where we've gotten some breaking news on a few fronts, Joe.
Yep.
One being the first no vote in the Senate for Pete Hegseth as Defense Secretary, Lisa Murkowski saying she cannot support him for Defense Secretary. The other being a court in Seattle knocking down, at least for now, temporarily blocking Donald Trump's executive order ending birthright citizenship.
We learned as well Tulsi Gabbard confirmation hearing set for next Thursday.
Yep.
Next week is going to be wild.
As
Join
if
us
this
on
one
the late
wasn't.
edition, of Balance of Power. Nicole Malliotakis, Republican from New York, will be with us on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Thursday, January 23rd. Man, this month of January is flying. We have stocks. We've got a bit of a rally, definitely off their lows here, Tim.
Yeah, NASDAQ down 0.2%. The S&P 500 up 0.2%. We're going to have much more on the markets in just a minute when we kick things off to Charlie Pellet. In the meantime, that movement, Carol, follows comments from President Trump. There was that virtual Q&A during the 11 o'clock hour, Wall Street time, with leaders out there in Davos.
And I should say rally because it's kind of just a slight move to the upside. But you're right. We have been focusing on that virtual Q&A that the president had with global leaders in Davos. So we're going to get into his comments on everything from inflation to interest rates to energy to coal usage, AI, geopolitics, and so much more.
And this has green investors look for that silver lining in Trump's presidency. And as we are reminded, the president can change U.S. oil rules, but it still doesn't mean energy companies will, quote, drill, baby, drill. We're going to get into the reality of the energy play in a Trump White House.
Plus, one stock that we are definitely watching, that's American Airlines. A surprise to the downside, stock is selling off.
And the global arsenal to fight global wildfires. It is feeling the strain right now.
It's an amazing story and deep dive by our Bloomberg News team. All of that to come in the next 60 minutes. First up, let's get a check on that trade. Here's Charlie Pellet.
Hi, thank you very much, Carol. And Tim could see a record close today on the S&P 500 index, right to the numbers. S&P right now trading at 6,098, up 11. That is a gain of 0.2%. A couple of minutes ago was trading above 6,100, but certainly a lot of green today. The Dow up 333 points, up by about 0.8%. Tech stocks, specifically chips, moving lower. Right now we have got NASDAQ down 0.2%. The NASDAQ 100 index also down by 0.2%. 10-year at 4.64%. The 2-year 4.28%. Spot gold flat on the day, $27.55 the ounce. West Texas Intermediate crude down 1%, $74.69 a barrel. And Bitcoin now at 105,420. Bitcoin up by 1.3%. You heard him live on Bloomberg Radio and television. President Trump says he will ask Saudi Arabia and other OPEC nations to, quote, bring down the cost of oil, and reiterated his threat to use tariffs to bring manufacturing back to the U.S. as he addressed world leaders gathered in Davos today. Right now, we've got oil stocks, for the most part, trading little changed. Chevron, it is down 0.1%. BP, the ADR, is up now by 1.1%. ExxonMobil shares trading higher by 0.5%. Again, West Texas Intermediate crude oil is trading lower now by just about 1%. Again, recapping, S&P up 11, a gain of 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. We start with what some described as a version of President Trump's stump speech on the campaign trail, or perhaps at a political rally. This time around, the president appearing virtually before world leaders. This was at the World Economic Forum's annual meeting in Davos earlier today, an event that our own Lisa Abramowitz, who is there on the ground, noted that Davos participants lined up for hours before it even started, all to hear President Trump.
As you might expect, Mr. President, you returned to office.
All right, actually, having a little technical difficulty, but Donald Trump did take Q&A. He started with a statement, and here's just what he said. He said, my administration is acting with unprecedented speed to fix the disaster we've inherited from a totally inept group of people and to solve every single crisis facing our country. This begins with confronting the economic chaos caused by the failed policies of the last administration. Again, these were President Trump's words before he started taking Q&A from a group of global world leaders, including B of A CEO Brian Moynihan, talking about inflation, interest rates, energy, coal, AI, geopolitics, and so much more. There was a lot that he covered, Tim.
With what we need to know and more, we head to the Bloomberg News Washington Bureau with a Bloomberg News managing editor for U.S. economy and government, Mario Parker. Mario, we've got a lot to get to. Starting, though, with something that happened after the president spoke to that group in Davos. A federal judge temporarily blocking President Donald Trump from restricting who is eligible for automatic U.S. citizenship at birth. It's an early legal setback for the new administration's hardline immigration agenda. It's one of a handful of lawsuits already over the order. What does this say about the president's executive actions and the life that these may have or not have when it comes to changing the rules?
Well, I mean, this was a sweeping executive order that raised questions when he first issued it because it flies in the face of what the thinking, the long-held thinking had been around the 14th Amendment and birthright citizenship, something that had long been held as a right and just part of the country's founding. So, not sure this is surprising, but it is a setback, right? In a week that Trump has taken for pageantry to essentially celebrate his return back to the White House, this amounts to the first speed bump and test of the sweeping power and agenda that he plans to enact.
Right, and Mauro speaks to something that we were kind of all saying once he got elected, that there are things that a president can do with executive actions and orders, and then there are things that, you know, kind of the U.S. system kicks in and reminds us that it's not always so easy, or in other instances, you know, you need something like Congress to make it all happen. Hey, I want to get to, the president's had a very busy first week already. Spoke with Sean Hannity of Fox News last night, a friendly audience, if you will, for the president. He addressed world leaders in Davos virtually, and I think some of the feedback was kind of mixed views. A lot, though, say what we are hearing from the president is reminiscent of what we heard from him on the campaign trail. What, though, stands out for you? What do you think should stand out for the Bloomberg audience?
Well, I think one of the things that stands out, other than the fact that he did deliver in a World Economic Forum stage, he did deliver a campaign speech. I think a couple of things that stood out, right, was A, the broadside to Bank of America's CEO, Brian Moynihan. Again, that was very reminiscent of a Trump rally where he calls out those that he is displeased with. So that was one thing that was quite striking. And from what we understand from our colleagues there in the audience, it drew surprise and gasps. The other, I think, from a business standpoint, is the fact that he seems to be intent on pressuring OPEC, Saudi Arabia, namely, to lower the price of crude oil and gasoline, even amid a market glut, because he wants to essentially bring down inflation and all those things, which leads to the third part that we saw from today. He reiterated his stance that inflation, he feels, is too high, but also interest rates. He can do nothing about that, even though he said that he would demand that that interest rates come down. But it did signal that Jay Powell is probably in for a rough ride here.
You mentioned that broadside against Bank of America. What he ended up doing was chiding Brian Moynihan and catching him off guard with the claim that the bank limits business with conservative clients. He said, "I hope you start opening your bank to conservatives because what you are doing is wrong." Bank of America came out and said, quote, "We serve more than 70 million clients. We welcome conservatives and have no political litmus test." That's what a representative for Bank of America said in an emailed statement to Bloomberg.
We should point out, too, the president also called out Jamie Dimon, CEO of J.P. Morgan Chase, for the same alleged treatment of conservative customers. And they put out a statement, too, saying we have never and would never close an account for political reasons, full stop. Having said that, what's kind of interesting, and, you know, Mario, we've been doing a lot of reporting here at Bloomberg about, you know, kind of leadership around the world, certainly at least in the United States, where we see CEOs seemingly that maybe weren't necessarily supporters of President Trump, you know, showing up in Washington, showing up in the inauguration. It is interesting to see kind of the corporate support so far that he has gotten, and some of the deals, whether it's around AI, bringing leaders together for different spends. But again, it's early days.
Yeah, it is early days, and it has been striking, especially if you recall the scenario about 8 years ago. There's a couple of things to point out there, right? The fact is, if you saw his speech earlier today at Davos, within the first few minutes, he mentioned this sweeping mandate that he feels like he has. He won all of the swing states. He won the popular vote. He invoked that as well last night in the Sean Hannity interview as well. What you're saying here, the response from corporate America and others as well, is the fact that in 2016, you couldn't say that, okay, well, he won the Electoral College. If you all recall, post-election, there was discussion about whether or not the Electoral College should be revised in some way. Well, it's hard to argue when he won the popular vote and the swing states, the Electoral College, right? These are, by and large, the customers of these corporations. This does show or signal to corporations and political parties alike that maybe his support is much stronger than was anticipated, both on the campaign trail in 2024, but obviously since 2016.
That's a really good point. Hey, I just want to sort of head to wrap things up with what he said about Russia and Ukraine and bringing that war to an end. He said he wants to meet again with Russian President Vladimir Putin. He talked a lot about not necessarily making the economic or business case for ending the war, but the lives that have been lost and the lives that are at risk during a conflict such as this. What power does the President of the United States have to help end this war?
Well, he does have power in that regard, or at least it's thought to, right? The United States has been one of the biggest benefactors of Ukraine, right? One of the supporters of Ukraine throughout this all. We know that Donald Trump, at least he says that he's had a good relationship with Putin in the past. Zelensky he met with just shortly after he was elected as well. And then he's making the case that natural gas prices are tied to this, energy independence is tied to this, and sanctions and tariffs have a role in this as well.
Well, and we're going to talk a little bit later on in this hour about energy in particular, because the president can certainly set policies, but then you have the economic dynamics of drilling more and what that means for energy companies. So it's something we're going to dig into a little bit deeper. Mario, thank you so much. We know it's a busy day for you and the team, but glad we could get some time with you. Bloomberg News managing editor for U.S. Economy and Government, Mario Parker there in D.C. All right, Tim, now let's get to a stock that's big time on our radar.
Yeah, it's American Airlines. Shares down 8.7% as we speak. The company warning a surprise loss to start the year as it tries to win back business travelers in a battle high cost, disappointing investors, Carol, following that string of bullish forecasts from the other large carriers. And by that we mean, of course, United and Delta.
Yep, shares of American Airlines dropping the most in nearly 8 months. They're off their lows, though, I believe. With a look at American, back with us is Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst George Ferguson. He's back with us from BI headquarters in Princeton, New Jersey. So, all right, George, what's going on at American and why the weak first quarter guidance?
Yeah, so their first quarter is going to have a lot less capacity growth, perhaps even none, compared to United and Delta. And so because of that, their expense base is going to be higher. We measure cost per available seat mile excluding fuel. That's going to be much higher than United and Delta. And therefore, they won't book a profit, or they're not expecting to book a profit in 1Q. And that diverges from their rivals. Look, I think America is bringing less capacity in the first quarter. First quarter is typically a softer part of the year. They expect to bring similar amounts of capacity as United and Delta later in the year. That'll drop some of these costs. So I think it's a little bit of an overreaction from the marketplace, because I think it may even be sound policy. They may even see some better yields.
So why are Delta and United doing something different than American is doing? What's American seeing in the market that United and Delta aren't experiencing or aren't seeing?
Well, I mean, look, United and Delta, I think, have better international markets, international routes, sorry, is probably a better way of saying it, especially into Europe. And so, look, Europe has been particularly strong over the last year. And I think United and Delta has found a way to make that continue into the winter season. I talked to lots of people now that are going to Europe in the winter. I don't know why. I guess Americans can't get enough of it right now.
It's time to go to the Caribbean, I'm just going to say, right?
That's a good question, George. And there's a lot of capacity in the Caribbean, and that's another good point. That's a strength of American. Americans, got a lot of inroads into Latin America and Caribbean. That's been particularly weak, suffering from overcapacity. So, maybe the setup right now doesn't play as well to American as it does to United and Delta and the strength they're seeing. But look, in 4Q, American showed very good results in all the markets that they served, results that were better than United and Delta. And so, I think they've made a turn back towards taking more bookings through agencies, travel agencies and such, away from the strategy they had of going more direct. That appears to have shown some results in 4Q. I'd expect that to continue. I think all of them live in similar markets. It'll be hard for them to diverge too far from each other. I think United and Delta have gained a bit from American's stumble on this distribution practice. I think now that American's coming back their direction, I think you're going to see a convergence. I think American will converge on Delta and United.
And I do wonder, too, I was trying to do some quick playing around here with the terminal in terms of what we saw, after Delta came out and United. I mean, the whole airline group shot up on some of the news. So I do wonder if just there was, a bounce back, and so now it's just kind of a resettling to what makes more sense.
It could be. Again, I think investors, 1Q, it gets concerning if you're not doing exactly the same as your peers. But the strong dollar sets up these big full-service carriers well. The discussion I'm hearing from all of them, including American today, was that premium products are selling better than basic economy. They're all set up to gain from that. So, look, I think, that's the right part of the marketplace to be in right now, that premium marketplace, international destinations, in your offering board. I think it might be a bit of an overreaction.
American is a little more reliant on those smaller planes. They cost more to operate on a per-seat mile basis than those bigger jets. What about costly new labor contracts, though? How should we think about labor contracts and labor as a result of what we saw today, or in relation to what we saw today?
Yeah, so some of the headwind was a labor agreement with their flight attendants. But look, United's still negotiating with theirs. Alaska was talking about flight attendant labor agreements today as well. No one can avoid, these labor groups move, pretty homogeneously. If one gets a decent contract, the others all see it and go for it. So I think that isn't necessarily going to, keep American sort of performing subpar. And the regional side, American talked about growing out more of their regional capacity in 1Q. I think that's a good sign. I think that means they see the pilots, enough pilot supply in order to go out and do that. United and Delta are doing the same. We're starting to see the backfill on that regional connectivity. That's going to help bring back business travel. So again, I think they're all going to have to manage that increased cost. American called it out on the call, but everybody's been backfilling their regional capacity. I think you're starting to see, too, signs that business is bouncing back a bit better, maybe after the election, maybe with certainty. I think we're starting to see more business travel, and that's going to be potentially an uplift for these carriers as well.
Hey, just real quickly, 20 seconds. American did say that there's a decent chance that corporate sales recover before the end of this year. Just a reminder what they got so wrong on this, and unfortunately, really quickly, if you could.
Yeah, so they wanted more direct sales than going through agencies. We call them global distribution services, like Amadeus. And it was probably a wrong turn, right? Because that's a lot of time where corporate sales come in or good premium sales. And so they've reverted back to traditional distribution, I'd say, or normal distribution like their peers.
All right. Good rundown of what's going on over at American. We really appreciate it. George Ferguson, he's Senior Aerospace, Defense, and Airlines Analyst of our Bloomberg Intelligence team there at BI headquarters in Princeton, New Jersey. American shares down about 8.5%. They were down as much as 10% earlier in the session. Coming up next, we get to the U.S. energy spend, be it from green or carbon worlds, the reality of what a Trump administration may mean. You might be surprised. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, they're both higher. NASDAQ in the red right now, right to the numbers, with the S&P higher by 8 at 6,094. Could see a record close on the S&P today, right now higher by 0.1%. The Dow up 311, gaining 0.7%, but NASDAQ is trading down, dropping 65 points now, down by 0.3%. A lot of chip names certainly weighing on NASDAQ today. The 10-year 4.64%, the 2-year yield 4.28%. Gold up 35 cents the ounce, up less than 0.1%, 27.57. West Texas Intermediate crude down 1%, 74.65 a barrel on WTI. We were just talking about American Airlines Group. It is warning of a surprise loss to start the year as it tries to win back business travelers and battle high costs. American down 8.6% right now. Among rivals, Delta up 0.6%, United down 2.7%, and after earnings, Alaska Air Group trading higher by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, this next segment, we're going to be looking at President Trump's energy policy toward green initiatives and those impacting the fossil fuel industry. First up, among his first moves, the president abandoned the global pact on reducing greenhouse gas emissions and is seeking to boost production of fossil fuels. And then before an audience of leaders in Davos earlier today, he asked OPEC nations to lower oil prices. It's something we just talked about with Mario Parker.
So despite all of what seems to be an anti-green policy, some green investors are actually finding a silver lining. Here to explain is a Bloomberg News executive editor Tim Quinson, joining us here in the Bloomberg Business Week studio. Tim, you remind us in the story that green stocks during Trump's first term did pretty well. Why did they do well? Was it more about interest rates, or was it more about policy?
It is a lot about interest rates. I mean, low interest rates are really good for renewable energy companies because cost of finance is low and they can, build a business. And yeah, so our story today on Bloomberg Business Week is a little counterintuitive in that you wouldn't think that Trump would be, maybe help green stocks, but maybe he will. He's so unpredictable. Today he's calling for lower interest rates. Whether that really has an impact or not on the Fed and other central banks around the world is, certainly to be seen. But he's talking about it, and things like that is good news for the green stocks.
And they didn't necessarily do well under President Biden, did they?
No, and that was sort of ironic that they did so poorly.
Despite the green initiatives.
Exactly. And mainly that came back to sort of inflation and the rise in interest rates and the pressure that they put on earnings of wind and solar companies.
All right, so that's the past two administrations, Tim. So get to where we are today. Why are green investors maybe optimistic, considering some of what we're hearing from President Trump kind of backing off what seems to be the green economy?
Yeah, I mean, it's counterintuitive, I suppose, and who knows whether it'll turn out to be.
We live in a weird world, so counterintuitive sometimes works.
But I mean, I think the Fed has reduced rates a few times. Whether they'll take further steps, I guess we'll see. It's I guess a lot of people don't think very many more, but there is some optimism for earnings and things like that. That there's wind and solar installations keep going higher around the world. Earnings prospects for companies like First Solar and NextEra and some of those companies are going up. And the valuations, I mean, these stocks are so battered. I mean, they're down like 2/3 on average from their highs. So we're not trying to call a bottom, but, there are some people, investors that are saying, well, maybe it's time that these stocks will turn around.
We're going to talk oil and the economics of oil with Ty in just a minute. But when we talk the economics of alternative energy, green, we think wind, we think solar, we think batteries, and the like. Is it possible that policies at the end of the day don't actually matter that much if it is indeed a good investment for companies to make?
I kind of think that's right. I mean, I think, when the U.S. pulling out of the Paris Climate Agreement, for example, and some of the things that Carol mentioned at the start. I mean, they're certainly symbolically, bad. And there's certainly with those policies comes, real action that will perhaps turn against, the renewable energy. But I think it is so reliant on the cost of financing. And if rates do edge lower, that was a big positive on the back of these stocks already just so beaten up that there's some optimism.
So even if we don't see the various government supports that we've seen in the U.S. government, it doesn't necessarily mean that all of the money or the initiatives that they supported doesn't mean that they're all going to go away or that everybody's going to, the demand doesn't fall off.
I think that's right. I mean, as Biden's administration showed, right, with their very pro, green policies, and the green stocks got hammered.
So Tim, where do investors think investors should be kind of maybe allocating?
I think batteries is one bit for the electric grid. Like that was one that a lot of investors mentioned. Wind certainly is probably the least optimistic on, given Trump's comments. And then solar, I think there is a little. I think installations are up. They're not growing as fast as they were before, in the U.S., but around other parts of the world they're growing fast. And some of the investors we talked to said you should look outside the U.S. for some of the renewable companies. Like in China, you may find some value in those stocks there.
Again, we're going to be talking oil in just a few minutes, but we can't talk about renewables without talking about oil, because those two are certainly related. And investment in renewables, I think, is related to the price of oil. Let's say interest rates come down, but let's also say that oil prices go up and oil gets more expensive. Does that historically accelerate investment in this tech, or is it too difficult to make big investments like that based on the price of a commodity?
That's a good question. I don't really know a precise answer on that. I mean, I would say that the demand for energy is certainly going up. And with that, they're going to have to, and if the price of oil does go up, then they'll be looking for cheaper energy supplies, and that would come back to some of the renewable space. So I would think that might, be a positive. But again, I'm not going to here say buy.
No,
but I think it's interesting. And with Trump coming in, it's just a very interesting time to try to look at these.
Absolutely, it's not like everybody's turning their back on it. Tim, thank you so much. Really appreciate it. Bloomberg News executive editor Tim Quinson, and I feel like this is a good turn to our next guest, another member of our Bloomberg team here. We did mention that earlier today. Donald Trump addressing world leaders in Davos, saying he would ask Saudi Arabia and other OPEC nations to bring down the cost of oil. And we saw just 50 hours into his second term, President Trump used his executive pen to slash regulations on U.S. oil and gas production. So you have seen him kind of, supportive of that drill, baby, drill idea.
Maybe. Not so fast.
Maybe, exactly. Well, this is what we wanted to get into, the economics of drilling. All right, so let's get to it. Ty Liu is with us. He's upstream oil specialist with our Bloomberg New Energy Finance team, and he writes about this, that while President Trump can change U.S. oil rules, he can't change oil project economics. Ty, joining us in studio to explain. I love this story because this is what Bloomberg does so well. I mean, remind us about the dynamics and the economics of what will get a major integrated oil company to drill.
Sure, yeah. Thank you for having me here. I think having looser, more relaxed regulations from the administration is definitely friendly and helpful for the industry, especially in the medium term, because it creates a lot more regulatory stability. But in the near term, in the short term, I think it's going to be pretty difficult to push oil production material higher just from regulations alone, and that's because when you're an oil major company, for example, you have an assets and portfolio of assets across the world, you really have to look at how these projects compete for capital within your portfolio. So even if you have very favorable regulations, for example, in the U.S. right now, or going forward for the next couple of years at least, if those projects, they can't compete with other assets in your portfolio, it will be harder for you as an oil major to make that decision to allocate a lot more capital, for example, to the U.S.
Well, simply put, if they're not going to make money on a major investment in a project, right, that maybe it's really expensive to drill in Alaska or I don't know wherever, they're not going to do it, right?
Well, they'll definitely make money in this oil price environment, but they have projects that will make them more money,
more productive financially.
Exactly, yeah.
Where's the sweet spot when it comes to oil prices for them to make big investments like this? You don't want the oil price too low,
right?
Because then those big investments aren't necessarily worth it. But you also don't want oil prices too high, because if oil prices are too high, then it shocks the economy, and it turns into a tailspin. What's the sweet spot?
Yeah, I think for these long-dated, long-lead projects, for example, if you're in the Gulf of Mexico and Alaska, you need 4, 5, even 7, 8, 9, 10 years for projects to come to fruition. So you probably look at the long-term oil prices, and right now a lot of these oil majors, they're looking at a price tag or mid-cycle price tag, what they call, about $60 to $65 per barrel, which is pretty close to what we have on the long-dated forward curve if you look at Brent prices. I think we're trading around $67, $68 right now. So it's around there that they're comfortable with.
Yeah, and we did see WTI crude actually down about 1% in today's session on some of the comments that President Trump made in Davos. The other thing is, though, what's interesting is that we talk about supply and demand, and you guys actually have put out a forecast, the NEF team, Bloomberg NEF team, and global supply growth is on track to overtake demand by 800,000 barrels a day this year. Even the IEA, the International Energy Agency, is forecasting that non-OPEC supply growth will outpace global oil demand in 2025. I mean, so already the supply-demand dynamics are not encouraging, perhaps in today's environment, to go out and do some new drilling.
Yeah, that's very true. I mean, if you look at the latest earnings calls from a lot of these U.S. oil independents, EOG Resources, Matador Resources, Wintif, Devon Energy, they all have all mentioned that a couple of factors comes into play when they make that 2025 capital spending and production decision. One is capital discipline. The other is capital discipline. The other is ability to generate free cash flow. Those are very important metrics for these companies nowadays. And also, they also look at all macro or global oil fundamentals in 2025. And like you said, right now, a lot of these agencies are forecasting supply will outpace demand in 2025. That's going to increase our inventory build, and that's going to push prices lower. Assuming we don't have anything political or surprising.
External shocks of some sort.
Exactly, right.
Hey, help us understand where we are as a country when it comes to energy independence. It's a very politically charged phrase, and it's one that came up a lot.
Sure.
Not just during the last campaign, but it's come up a lot over the last few campaigns.
Yeah.
How energy independent is the U.S., and where does our oil go? Who uses it?
I think if you look at a high level, the U.S. has been a net exporter of energy since 2019. When you talk about natural gas, we're exporting a lot of that stuff. I think liquefied natural gas, LNG, we're exporting about 13, 15 BCF a day nowadays, which is
how much?
13 to 15, about 15 billion cubic feet a day. And the U.S. is probably produces around 105 billion cubic feet a day, give or take. So that's a substantial amount that we're shipping out. Global oil, the story is more complex. We definitely ship out a lot of oil, but we also import a lot of oil. And that's because the
different forms of oil, is that it?
Exactly. Yeah. Different grade, different type of oil that we use. Our Gulf Coast refineries is configured to consume like heavy sour crude, but the U.S. produces a lot of light sweet crude. So we end up shipping a lot of that to other parts of the world. Meanwhile, we import the stuff that are more suitable for our refineries. So that picture is more complex.
Yeah, it's a reminder, right, that it's all not the same and stuff. The nuances, but still fascinating in terms of that big macro picture against what we might hear out of the Trump administration. Ty, thank you so much. Really appreciate it. Ty Liu, upstream oil specialist with our Bloomberg New Energy Finance team, joining us here in studio. As I mentioned, WTI crude just did dip a little bit on those comments that President Trump had out of Davos, asking OPEC to increase production. WTI crude, $74.54 a barrel as we speak.
Hey, when we come back, we're staying on energy, and we catch up with one investment advisor who suggests buying some of the names in the group. That's next on Bloomberg Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P both higher. We've got NASDAQ in the red. Right now, the S&P 500 index pushing higher, up 12 points, up by about 0.2%. On track right now for a record close. Stocks heading towards records as oil fell after President Trump urged OPEC to lower crude prices, also saying he will push for interest rate cuts. Right now, the S&P up 0.2%, the Dow up 0.7, NASDAQ though lower by 39, down 0.2%. 10-year at 4.63%, the 2-year 4.28%. Gold flat on the day, $27.56 the ounce. Crude down 1.3%. West Texas Intermediate 74.47 a barrel. Brent, the global benchmark, 78.17 barrel of Brent now lower by just about 1%. President Trump's pick for Transportation Secretary Sean Duffy says a production cap of Boeing 737 MAX will remain until he is convinced of sufficient progress in quality control, suggesting the new administration is maintaining a cautious view on the plane maker. Boeing shares up right now by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic, live here on Bloomberg Business Week. Well, oil did fall after President Donald Trump said he'll push Saudi Arabia and OPEC to reduce the price of crude, reviving a tactic to control energy prices that he frequently used during his first term in office. The Organization of the Petroleum Exporting Countries, OPEC, of course, and its allies, though, have been, as you know, engaging in a years-long effort to support prices by curbing output.
Energy is certainly one area that our next guest suggests investors should consider. Let's get to Jason Bottenfield. He's managing director and partner at Park Cities Group at Stewart Partners, joining us from Dallas, Texas. Good to have you with us, Jason. We did just spend a good portion of the last 20 minutes chatting about energy. You believe it's something investors should be investing in. Why now and where specifically?
Yeah, no, thanks for having me, Tim and Carol. I appreciate the opportunity. Yeah, oil, and I was listening to Ty on the conversation there about oil and the ups and downs. It's been a good area to be in for the first start of this year here. You know, one of the things I like about what's going to happen with oil, you know, outside of the fact that we are producing a lot of it already, but one of the areas that I think is very attractive at this point in time is the transmission of it. So moving it through the pipelines, whether it's the natural gas or the oil, you know, it's a dividend play. It pays out pretty well, but it can be volatile, and it is up a little bit this year, pretty good, 8-9%. But I think it's an opportunity that will continue over the next 4 years. I think because of what Ty was saying, you know, potentially on one angle he was going with, which is regulations are going to be a little less. So that's an opportunity, I think. I think it's an area that people have looked at over the years, but might be another one to look at again.
But so the major integrated oil companies, the drillers, what exactly would you buy?
So I would actually be looking at the midstream players, which are the pipelines.
Okay.
So actually, the big refineries, I think, because the price of oil, as we're talking about, could go down to $65 a barrel, and they still make money, but that could be weight on the stock if you actually go into those, and the price does come lower if they produce more. OPEC's producing more. If there's just a glut of oil out there and the consumption doesn't meet up, but again, I think regulations coming off on electric vehicles just adds to that story that, you know, the oil is going to be flowing, the exports are going to continue to flow, there's not going to be any impacts there. So I think that transmission of the actual product is the area that I'm talking about with those midstreams that looks attractive to me.
So you mean like Cheniere and Williams companies, things like that?
Yeah, those types of companies where they're traditionally moving, you know, the natural gas, or they're moving the oil through those lines and, you know, moving them out and exporting them. So, you know, those are the areas, exactly.
But somebody watching or listening right now might be saying to themselves, hey, what happens if the oil price declines? How are these pipelines affected? Just give us an idea of what happens when to the transmission and sort of the economics there if we do see a decline in energy prices.
Yeah, there's a natural, you know, because it is, they are tied a little bit. So, you know, I wouldn't say it's one for one when oil goes down that the pipelines go down, but they do trade with it. So, you know, where oil's down a little bit today, the pipelines are down a little bit today. But again, I think it really is that oil flowing is oil flowing. So they get paid almost like electric companies as the stuff moves through it. So they just want to keep it moving. And as long as the consumption's there, the need is there, and they're allowed to move it through, and we're producing it, they are the ones that are going to benefit from that, and the export that goes along with it. So I think that we've all seen that Trump's not going to put many regulations on that,
right?
And he's not going to put much on the industry. So.
Economic weakness, be it U.S. or global, that certainly would impact pipelines, right? They wouldn't have as much stuff to kind of move around.
Yeah, these are not for the faint of heart. I think you do need to do some research on these. There's been years in 2015 and things like that where they get touched up, and especially during recessionary periods. But I think where we're coming off of kind of a 2-year bull market, maybe going into the third, things are looking promising right now. I think it's just it's an area to where you can pick up some yield. And, it's not a conservative play by any means, but I don't think it's an ultra risky play at this point.
We're also interested in cybersecurity, specifically with regard to AI. We've had a lot of folks coming on our air lately and talking about the risk of cybersecurity and, in fact, other ways to find exposure to this space through insurance and other providers of services. How do you see finding exposure for your clients?
Yeah, so cybersecurity is one of those things, right? When I think about it, is that it's going to be the last area for companies to cut, or smaller companies that don't have cybersecurity teams are going to need these outside services. So, attacking that area through an ETF where I don't have to be as specific as going into an individual stock name, can be beneficial because, there were some touch-ups last year with a certain company in that space, and it went down, but it was actually a buying opportunity. But to avoid some of that exposure of the business risk, exchange traded funds are a great opportunity to get that exposure. It's a little bit more across the board, and some people may want to pick direct plays, but I like to go into that market with exchange traded funds because I do get that kind of broader exposure to that industry. So that's how I play it with clients and myself.
Jason, one thing I want to ask you, we certainly ask it of all the kind of big global strategists that we talk to, the dynamics that they are using to shape investment portfolio. And I understand every client is individual. I get it. But having said that, there are big metrics that shape kind of maybe where you steer someone, even if it's putting new money to work. And so what are those dynamics? Is it what we get out of the White House, what we hear from President Trump, what actually happens in terms of policy? Is it the Fed, the first meeting of 2025 happening next week? Is it earnings where we are in that earnings season? We're going to get some big tech names next week. Is it valuations? What is it that right now is really driving how you are helping clients shape where they make investments?
Yeah, no, it's a great question. It's one that comes up often, as we're on the ground talking to clients and what they're feeling and what they're being impacted by. And, unfortunately, the story goes back to inflation. It's the biggest thing. I think a lot of our individual clients don't think of it that much. They do look at kind of the more scintillating news facts that come out, whether it's elections or policies or regulations or what's going on. But it really isn't. It really is the inflation picture, because we're really at, a lot of freezing going on across the country in some areas. I really think that we're on thin ice with the Fed and the economy. They had pretty good direction on where they could go with cutting rates. I think they may have one cut left as far as what the 2-year showing. You're seeing the 10-year and the 2-year move around. The 2-year, I think, allows them to have one more cut, but after that, it's probably going to be a pause, unless the Fed really sees that the job market isn't continually heating up. I've been saying for 2 years, I thought that the job market needed, unfortunately, I think the Fed's looking for unemployment for them to have another basis to move lower. Can they do the soft landing and be where they're at? So I think a long-winded answer, many of your guests may be, is that inflation is still going to be a picture in 2025. And I was really hoping that coming into this year, that would be off the table, and we would be talking more of the fundamentals of earnings, more about maybe what's going on with regulations or unfreezing. But it really is. The inflation's still on the table, unfortunately.
All right, got to leave it on that note. Hey, Jason, thank you so much. Jason Bottenfeld, he is Managing Director, Park Cities Group at Steward Partners, joining us from Dallas, Texas on this Thursday.
Hey, taking a look at equity markets as we're a little more than an hour away from the close of trading on this Thursday. The S&P 500 up 0.2%. We could still see a record close today. The Dow Jones Industrial Average up 0.8%, and the Nasdaq down 0.2%.
All right, everybody, still to come, how nonstop wildfires are straining the global firefighting arsenal. It's a story that, when we were reading it this morning, we had to do.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, safe to say we're pretty obsessed with this story. Firefighters in Canada, Australia, and America helping out one another, countries sharing and redirecting firefighting defenses, including manpower, planes, and more as needed. That has been the norm. And yet, Tim, as fire seasons are merging, some countries are beginning to question the long-held wisdom that sharing manpower and equipment is the most cost-efficient way to battle infernos. They're questioning that.
Yeah, this is we continue to see new wildfires in Southern California. With more on today's Bloomberg Big Take, which examines the international firefighting agreements that currently exist. We turn to Bloomberg Green Climate Tech editor Brian Kahn, who joins us from our San Francisco bureau. Brian, what are the international firefighting agreements that currently exist? I think a lot of people before reading this might not have been familiar that these are actually in place.
Yeah, it's a bit surprising. I mean, we have folks that travel thousands of miles to fight fires. Right now in LA, we have firefighting crews doing battles, and it basically comes down to these mutual aid agreements. So countries sort of say, hey, you know, if we have a really bad fire season, we need a little help. Can you loan us some help? And usually this works with the northern and southern hemisphere, you know, having opposite fire seasons. Unfortunately, that is changing, and so that's what's causing folks to start to rethink how these agreements operate.
Take a step back. I love how you start the story. Pascal Duclos, and forgive me if I'm not pronouncing his name, but tell us about him and his aircraft and what he's been up to.
Yeah, so he flies what's known as a super scooper plane. If you've seen images of these planes swooping over the ocean and scooping up water, that's quite possibly Pascal doing his flights. This is a team of Canadian firefighters from the province of Quebec. There's about 8 folks, 4 planes, and they're on loan to the LA Fire Department to basically do this kind of work during winter fire season in LA. Obviously in Canada, there's not too much fire at this time of year, so that's why they're able to be there at this time. But it turns out this plane is actually like a very in-demand thing. Not a lot of folks have them, and it's been out of production for about a decade. They're finally restarting production to get them into the EU, and I wouldn't be surprised if other firefighting departments want to have these planes as well because they're so important to battling blazes.
So what ends up happening here? Do we get to the point where we're not really sharing resources across borders because those firefighters who are in different hemispheres are continuing to battle blazes closer to home rather than be able to go thousands of miles away to help out someone else?
I mean, it could very well put strain on these systems. I mean, we've already seen, Canada became a net importer of firefighters after these 2 back-to-back horrific fire years in 2023 and 2024. That can lead to burnout if you have thousands of firefighters flying across the globe, if you have a very finite number of these planes or other equipment to fight fires, helicopters, things like that. So, will we see countries pull back? It's possible. We haven't seen that happen yet, but with the risk of burnout, the risk of short resources, the risk of needing planes to fly both in Australia and California at the same time, we could see there be a really hard strain on the world's firefighting resources.
I mean, that's what struck me in reading your story, that we've been obviously covering everything that's been out there on the West Coast, continuing to as new fires still pop up. Having said that, you reminded us in your reporting that it was around this time in 2020 that the U.S. was helping Australian firefighters with their catastrophic surge of blazes during what became known there as the Black Summer. So, as you say, wildfires are not a new thing, but climate change has changed the severity of them, right? And then the occurrence maybe of when they are happening around the globe.
That's right. Yeah. I mean, with a warmer world, that means we have more fires that are larger and they burn more intensely. In the case of fires like we've seen in California, we actually have seen fires like these that have exploded become 400% more common as the planet has warmed. And so, is that trend going to continue? Yeah, it is. And so I think that is where you start to get into these issues where both you have these larger, more destructive fires and you have them burning later into the season. So what was once the shoulder season is now the main event. Eventually, we're already seeing this happen in a lot of ways. There's not a fire season anymore, but a fire year in places. I mean, the fact that, I'm here in San Francisco. Luckily, we haven't had fires up here in the winter, but we're seeing them down in LA. We saw fires in Northern California over the summer and fall. So this is really becoming a huge issue, not just here in California, but also, as you mentioned, in Australia and other parts of the globe as well.
From an equipment perspective, too, a lot of the infrastructure that we see flying around, as you write in your story, is on loan from other parts of the world. Does it mean that these fire departments are going to have to start buying assets such as these because they'll be being used, 52 weeks a year rather than seasonally?
Yeah, I mean, they're absolutely starting to think about things that way. And one of the folks we spoke with was a fire commissioner down in the Australian state of New South Wales. He said, what we're looking at is the folks that are winners in the battle against fires are the folks that are looking 10 years out, thinking, what do fires not look like today, but what do they look like 10 years in the future? And if you look towards that future, you see more large fires, you see a strain on resources, you're absolutely going to be making those decisions. We've already seen that play out in places like the EU, for example, after a really bad fire season there. A few years ago, the EU kind of appropriated a lot of money. They made these big orders for these Canadian super scooper craft, and another one of those countries, Greece, is in the process of spending, I think it's on the order of about 2.1 billion euros to not just buy the super scoopers, but also pick up 1,000 firefighting engines and other forms of equipment as well. So I think that you're absolutely seeing them turn towards this owned instead of renting approach.
And let's not forget, you also get into the story about kind of the stress of doing these 14-hour shifts and so on. There's so much great information in this story. Very eye-opening. Brian, thank you so much. Brian Kahn, he's climate tech editor, Bloomberg Green, joining us from our San Francisco bureau. That's going to do it for this hour of Bloomberg Business Week. If you're watching on TV, the close is coming your way in just a moment. But Tim and I, we're going to continue, right?
Yeah, we're talking about electronic arts and much more right at the top of our hour. That's next on Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. California's state legislature has approved a $2.5 billion package to help the Los Angeles area recover from the wildfires. Some schools there have reopened.
It's a sound we haven't heard in about 2.5 weeks. Students back to school here in Pasadena, a district that includes Altadena.
10,000 of our 14,000 children have been impacted by this devastating fire.
Today's the first day back. I told Lola if she sees any of her classmates, who lost their home, to give them a hug.
I was displaced. I have 51 friends and acquaintances who've lost their homes.
Craig Figner for CBS News, Pasadena, California.
A federal judge has temporarily blocked President Trump's order ending birthright citizenship, calling it blatantly unconstitutional. Washington State Attorney General Nick Brown was one of the AGs who sued over it.
We are really relieved, frankly, that at least this court has seen the blatant unconstitutional action of this president.
CBS's Natalie Brand tells us Trump may put even more troops at the border.
CBS News has learned the Trump administration is considering sending as many as 10,000 U.S. troops to the southern border and potentially using military bases to hold migrants awaiting deportation. The Pentagon has already said around 1,500 troops have begun to deploy to help secure the U.S.-Mexico border.
The Senate has confirmed Trump's pick for CIA director.
The nomination is confirmed.
John Ratcliffe was director of national intelligence during Trump's first term. Trump's nominee for defense secretary, Pete Hegseth, is facing a tougher road to confirmation now that Alaska Senator Lisa Murkowski, a Republican, has declared she won't support him. Senate Minority Leader Chuck Schumer is a solid no.
If there was one word that should never, ever describe a Secretary of Defense, it is erratic. But that is the one word that describes Mr. Hegseth best.
OxyContin maker Purdue Pharma and its owners, the Sackler family, will pay $7.4 billion to settle lawsuits over the painkiller and the opioid crisis. Here's Loyola law professor Lori Levinson.
A real sticking point in this case has been whether the Sacklers, who will no longer be in charge of Purdue, will hold any personal responsibility for what happened to thousands of people with opioid addiction.
The Oscar nominations are out. CBS Entertainment reporter Matt Wolf says Emilia Perez leads the way with 13 nods, including Best Picture.
Emilia Perez was the little film that could, right? It's avant-garde. It's gorgeously shot. It's got a blazing soundtrack, too, and it's got this super compelling, timely sort of story.
Wicked garnered 10 Oscar nominations. This is CBS News. A new study finds a link between ADHD, attention deficit hyperactivity disorder, and a lower life expectancy. CBS's Matt Piper reports.
The University College London study finds adults who have been diagnosed with ADHD, especially women, may have shorter lives than those without it. Researchers say men's life expectancy reduces by as much as 9 years, but it jumps to 11 years of a shorter lifespan for women with ADHD. The study also found fewer than 1 in 9 adults with the disorder has been diagnosed. The CDC says more than 15 million adults and about 7 million children have been diagnosed.
ADHD is the most common behavioral disorder diagnosed in children. There's been a silver lining to the recent frigid weather in New York City. It's kept most of the rats in their burrows. The city's rat czar says fewer people are out in the cold dropping food or wrappers, so hopefully the rats find less to eat when they do venture out. Hungry, cold, weaker rats are less likely to breed. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
Yes, indeed, everybody. We are just about 1 hour away from the closing bell on this Thursday, January 23rd. I'm Carol Massar along with Tim Stenovec. We've got stocks pretty much hovering near their highs of the session. Slight gain on the S&P. NASDAQ just a little bit lower, but most of the major industry groups, Tim, in the S&P 500 are just a little bit higher.
We're going to have much more from Charlie Pellet in just a minute. In the meantime, shares of Electronic Arts, wow, they are plunging. Biggest decline going back to 2008. We're going to dive into the decline with Jason Schreier in just a few minutes.
He's someone who really understands this
literally
world.
written the books on the industry.
He has. All right, also, we're going to dive into supply chains in a world of potential tariffs with a partner at the global consultancy firm, Carney. What's interesting is you and I have had lots of conversations about global supply chains moving around the world, so we'll see what they have to say.
Yeah, needless to say, I think a lot of folks who are making the decisions about where stuff is made are like a little busy right now, maybe staying up late, thinking about, okay, what's the Trump administration going to mean for me?
What do I do? What do I put stuff, right?
How does a $6,000 bottle of scotch sound?
Yeah, why not?
$15,000 ice bath? If that's not really your flavor, Carol.
What else you got for me?
A Stradivarius worth, at the low end, $12 million.
I'm not really into that.
Well, it is bonus season,
Okay.
and Bloomberg Pursuits has a great list of things to spend your bonus on. Chris
Sparkly,
Rouser
great
is going to
designer
stop by.
bag, perhaps.
Yeah, I got my eye on that $12 million violin.
No, you don't.
No, I don't.
You don't. All right. We're going to get to all of that over the next couple of hours. First up, let's check in with the trade and your top business stories. Here's Charlie Pellet.
Hi, thank you very much. Indeed, we got 54 minutes to go until that closing bell clangs on Wall Street. We are looking at gains right now. Could see a record close on the S&P. Could see a close above 6,100. Right to the numbers. S&P up 12 now, up by 0.2%. Dow Jones Industrial Average pushing higher by 327 points on the Dow. That is a gain of 0.7%. NASDAQ down 38 for the NASDAQ Composite Index, a decline of 0.2%. 10-year at 4.63%, the 2-year 4.28%. Spot gold down 0.1%, down $4 the ounce now, 27.52. Keeping an eye on crude WTI, West Texas Intermediate down 1.2%, 74.51 a barrel. Oil is falling after President Trump urged OPEC to lower crude prices, also saying he will push for interest rate cuts. Now, what do investors want to see for further gains in the equity market? Ethan Devitt is Chief Global Market Strategist at Moneta Group Investments.
So in order to be firmly risk on, we need to know that many of these concerns, which are keeping investors up at night regarding inflation, the direction of the Fed, what's going to happen with tariffs, what that would do to the U.S. economy, all of that needs to be put to bed a little, and all we need for that is clarity.
Ethan Devitt of Moneta Group interviewed on Bloomberg Open Interest. Global semiconductor stocks from ASML Holding to NVIDIA are falling after SK Hynix earnings left investors questioning whether demand for AI will live up to sky-high expectations. Right now, NVIDIA down 0.5%. ADRs of ASML down 3.3%. AMD down 0.6%. Intel lower now by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. Well, shares of Electronic Arts plunging earlier today. It's the biggest decline since 2008. At one point, Carol Massar?
Yeah, it looks like it went to, when it was down about 25%, that would have made it the lowest since 1999. So big move down.
Okay, that's pretty remarkable.
Yeah.
The gaming company warning its financial results would be weaker than expected due to poor sales results of 2 titles released over the holidays. We got with us Jason Schreier, Bloomberg News technology reporter who covers the video game industry. He's also the author of quite a few books, including most recently Play Nice, The Rise, Fall, and Future of Blizzard Entertainment. He joins us from New York City. Jason, good as always to have you on the program. EA pinning quite a bit of the blame on this on EA Sports FC 2025, also Dragon Age, The Veilguard. What happened to these titles?
Hey, Tim and Carol, thanks so much for having me. Yeah, it was a rough prelim report for EA. I believe I just checked, they're down about 17% now on the day. So yeah, just brutal. Yeah, 2 things happened. I think the majority of this kind of dismal report is because of EA Sports FC, which, man, that is a mouthful. That is a hard name to say.
It doesn't roll off the tongue, does it?
It does not. You might remember it as FIFA because that's what it used to be called.
I knew it.
A couple of years ago. Yep. And then.
Well, Jason froze for a second, so I'm going to use this opportunity for us to get back our connection. But you remember the big issue, Carol, was they lost essentially the rights to use FIFA. And that was one of the challenges. And as soon as we get Jason back, that's one thing I want to dive into.
Which was a big franchise for them.
Huge franchise. But I wonder if that's sort of at the core of the problem.
I mean, this is what I find interesting. And I was just thinking about, coming off of Netflix, and we talk about the importance of content and having the right content. And I don't know, in terms of the video game world, was it the branding? Was it the game itself and not having the right content in terms of those who want to play these games? And maybe that's why they didn't see the numbers that they expected.
I'm just checking out the Bloomberg function, looking at, 19, wow, that's pretty incredible. At one point today, Carol, down the most going back to 1999.
Well, we should point out it's spurring a bunch of downgrades. B of A cutting it to neutral from buy, and this analyst saying we're no longer confident that EA can gain enough share of player engagement and spend to drive meaningful growth in a struggling PC console game industry.
And a reminder, these weren't the earnings. These are preliminary numbers that came out ahead of time. Let's go back to Jason Schreier. Jason, you said we might remember this as FIFA. Is that the problem? That the FIFA franchise was such a strong name and then they lose the rights to that? What happened there? And that's the issue.
I think it's one of the problems. So the name change actually happened 2 years ago, and the 2023 entry did pretty well. EA said in their results report that part of the reason that the franchise didn't grow year over year is because of the tough comp, because their marketing spend was so big the year before as a result of the name change that they didn't put in as much marketing money this time around, and so they're not seeing the same results. But it speaks to a macro problem that the video game industry is facing. Not a lot of people are buying new games at the same rate as they did a few years ago. People aren't spending quite as much, and also people are getting a little bit sick of these games that I think even the biggest FIFA players, the biggest soccer fans, are a little bit sick of the way that they keep asking players for more and more money.
That tougher comp is why BMO Capital Markets, they did a downgrade to market perform from outperforming. They cut the price target on the name on EA to 145 from 160.
Jason, what's the macro issue here? Because I remember, a decade ago, the big conversation was, okay, mobile gaming is going to destroy console gaming.